Good morning. You're watching India Market Open, and we're set for an interesting day. I think range-bound trade is what we saw in the closing yesterday. We're seeing that overnight in global markets as well. A lot of anticipation and hesitation ahead of data. And that's really been the trend, isn't it, Niraj?
Yeah. But the small good news that trying to latch onto at these highs, oil correcting twice in 2 days. Yeah. So that was the interesting piece that came up. And there's this lovely piece that I read on Bloomberg, Tamanna, which spoke about how European nations, for example, are completely misaligned with the kind of defense spending that they will have to do. They've apparently done some $2.2 trillion worth of spending thus far. But if it has to return to Cold War era kind of spending, then the actual spending needs to go up to 10 trillion. And I was thinking, is it advantage a lot of global manufacturers, including India?
I was just wondering how you started that sentence with a lovely piece and talked about how
the analysis was lovely.
Worlds need to spend more and arm themselves
from an economic perspective, it's great news, right?
Yeah, I don't know. Yeah, perhaps, of course. Defense spends boost everything along with it. That rising tide freezes all boats. But yeah, hopefully we will not have
wars, conflicts.
and conflicts. But talking about what's been happening overnight as well, no real move or big move really on US markets. Range-bound trade is what I would say. And the anticipation really is for sets of data that are going to come through the next couple of days. The next 48 to 72 hours becomes key from a data perspective. The biggest one of them, of course, is March CPI that the street will be looking for. Now, the anticipation and the concern is that you're going to see hotter than expected inflation. The estimate is 0.3% of an increase for March month on month and 3.4% year on year. Remember, the Fed wants 2%. The Fed wants 2% and is really not budging from that. So that might spoil moods to some extent. And, that trepidation definitely been seen in markets as well. Oil is something that Niraj was talking about. On the crude front, it's, I would say, more of profit booking than anything fundamentally changing. We told you yesterday how Israel moving out of South Gaza is being seen as a positive, but the predictions are for a shortage, a supply tightening of crude through the rest of the year, maybe up to 45,000 barrels a day. Nevertheless, you have seen at least Brent come down a notch to $89 a barrel mark. Quickly look at Asia and how Asia is opening up. Largely mixed, nothing too great. In Japan, you had corporate inflation coming in hotter than expected, increased actually 3 months in a row. So that would keep the Nikkei quite tepid. Let's look at the implied open for Indian markets here and what we are expecting. We're expecting a positive up move. That's a trend that I've been noticing. We're starting strong. Now, whether we can sustain or not, by about afternoon, I think that slack comes in. But we start strong on most days. So that's expected today as well, perhaps.
Yes, you're right. And if it was on the broader markets day before yesterday, it was on the index as well. So, some profit bookings seen at higher levels after that one-way surge that we've seen and was seen in trade yesterday as well. And I think which is why a few people are saying that let's not bet on the index per se now. It was great to bet on the index at 22,100, 200. Now it's kind of slackened a little bit. So let's look at other options. But frankly, if you look at the index trajectory and based on what option writers are doing, 22,500 significant put writing, 22,800 strong call writing. Now, can the market force the hand of the call writers is a separate question. But otherwise, this seems to be that range. Yes, the highest OI is at 23,000 on the call side, but the writing yesterday was very high on the 20,800 side as well. From amongst sectors, and therefore you try to look at sectors and what are doing well. And Tamanna had outlined this beautifully yesterday in the closing session about what sectors are doing well. I'm just borrowing from there. Pharmaceuticals, frankly, just stand out. And now they're seeing leverage longs. If you see yesterday's session, healthcare, both on the delivery side, on the cash, as well as on the F&O side, as well as the long positions being added from a Cipla to a Metropolis. Healthcare is just seeing some very strong leverage positions as well. So clearly a bucket that a lot of people seem to be betting on. So watch out for that one. And yesterday I thought tech saw a bit of short build up. Yes, there were stocks like Persistent which did okay, but otherwise tech saw a bit of short build up yesterday. ahead of the TCS numbers. There's this federal lawsuit as well that has come up. Don't quite know the implications of the same really, because we've seen this happening in the past. But some short build-up seen in tech in yesterday's session. Interesting to see how those stocks develop until Friday. And maybe, Tamanna, maybe we don't get too much of a sense about what IT as a pack will do from TCS by virtue of the fact that the annual guidance isn't quite there from them. But maybe post HCL and Infosys, which are the two large ones that give that annual guidance, and the commentary thereof, might be interesting to see what happens.
So fundamentally, two things that maybe in the medium term are looking positive for IT companies. One is that we keep reporting constantly how all data is pointing to better than expected US economic indicators. So there's no recession there. That economy is growing strong. It's the largest client base for all IT companies. So that's going to definitely help. American companies focused very sharply on how AI capable these companies are, and in that sense, your big three are going to do the best. Your big three, big four are going to do the best, relatively speaking. So one way or the other, maybe short term, a bit of pain, but perhaps the tide is turning for IT. And as you've been saying, those info edge numbers, those Naukri numbers, if you're beginning to front load and hire, and usually these companies will hire when they have visibility on those orders being fulfilled, right? So that's maybe telling you a different story.
Actually, you're right. It'll be interesting to see the hiring trends this quarter more than anything else. Is Naukri a lead indicator or is it a one-off? It's an interesting one. We haven't heard from Naukri, unfortunately. Maybe post the results.
Hint, hint. To the corporate team of Naukri. You need to come and speak to us as well. But anyways, fund flows. I just quickly wanted to go through fund flows before we move ahead. Like we said, nothing too exciting happening in terms of what the closing was yesterday. But nevertheless, FIIs were selling once again about 593 crores. DIIs bought about 2,257 crores. Again, another consistent trend where it is domestic investors and domestic institutional investors fueling the Indian markets. We're just marching to our own tune. In terms of stocks to watch, quite a few, but I'll just start with 197 Communications. A few things happening over there. For one, of course, you have the Paytm Payments Bank CEO, their associate company now, with which they are severing ties rapidly. 197, that is. So their CEO has resigned due to personal reasons. He's out on his way out soon. It seems to be the season of CEO exits, isn't it? On a separate note, maybe for different reasons, but nevertheless,
That's a good piece for the editor's cut, maybe, on Friday.
Yeah, but different reasons, all of them. Personal or what, one way or the other. But then, another reason to watch it is my colleague Harsh pulled out some interesting data on how FPIs have been increasing their holding in 197 by about 2.5% as compared to December. So in the last 3 months odd, they have loaded up and Goldman Sachs has increased its shareholding to 1.32%, Tiger Global, Societe Generale, all of them. So that I thought was quite interesting as well. When it comes to 197, you might see some price movement there today. Exide is another one. So the news point on Exide is nothing massive, but just because this has been a stock in focus and sharply in focus, they ended up with 2.5% gains yesterday on the back of a massive uptick the day before as well. So 2 consistent days of gains. So what's the news right now? They have acquired 26% in a SPV, really, and the amount is small. It's just 5.3 crores. But this special purpose vehicle unit with CleanMax Enviro Solutions allows them to become a captive consumer for solar power at their Haryana plant. And that's interesting to me because the focus on renewable, and that's one of the prerequisites, right, for what they have now been asked to do. They're going to be making EV batteries, and a lot of the conditionalities about what your power sources are as well. So I found that interesting. Exide, one maybe that you wanted to watch. IndusInd Bank was the other one. Now, the promoter entity actually has acquired 60% stake in Invesco, which is the Atlanta-based, investment firm's Indian subsidiary. So they've got a 60% stake in that. Invesco will still have 40%. Both will be sponsor status. But look at it in the picture of IndusInd's move to tap what's happening in the equity markets right now. Everyone wants to come in and tap that appetite of Indian investors for equity. And IndusInd Bank is moving in that direction as well. So I thought that could be, interesting. And you could see some move there. Yeah.
Yeah, it could be very, very interesting, all of these. And, every day we've had one bank take center stage and come ahead. Yesterday was ICICI, before that Axis one day, and then HDFC Bank the last week, so it could be interesting. I thought the block deal on Protea and eGov is interesting. The market has been waiting for this for a while now because 361 Funds holds a very large stake. I think 23-24% if I'm not wrong. Now, plan to sell about 21.5 lakh shares in the company with a block deal. It's about 245 crores, including the green shoe option. So, from what I hear, this is not the whole tranche. And therefore, usually, if blocks have been absorbed well, the stocks tend to rally. Now, I may be wrong here, viewers. This is my limited understanding that this is not the whole tranche. And if that is not the case, then you might not see a one-way rally. But if this is, then, and if it gets absorbed well, then could be interesting. But the limited point is, a lot of smart money is interested in buying some stake in this one. So could be seeing some interesting blocks on this one. Watch out for Protea and eGov in the session today. We've been talking about Paisalo Digital and how the stock has done well, some announcements that they have made. Now look at the Q4 update for Paisalo Digital. The AUM up 32% YOY, disbursements up 38%, geographic footprint at 2455 touch points versus 1052 touch points. So the Q4 update isn't necessarily the worst, but as we showed in the stock price, and we'll pull up that chart once again, we'll just show you the stock in the last 1 month due to various reasons has come off quite materially. Does this revive that little bit of, how do I say, buying or interest in that stock? Remains to be seen. But what a brilliant uptick that it had, and then unfortunate pullbacks that we've seen in that stock. Anyways, TCS could be interesting. Tamanna, I don't know what your thoughts are here, but there's a new federal lawsuit which alleges that TCS targeted older American workers for termination to make room for foreign workers on temporary visas, Red H1, Red Indian workers. I don't know if this really brings about a big reaction on the stock or no. Difficult to say that, at least for me. Yeah. I don't know what your thoughts are, but interesting just out of the numbers.
They have, I think this is par for the course if you are doing business in America. But having said that, would be, I think, preemptive to just dismiss this as yet another lawsuit. We'll have to wait and see how that pans out. But definitely one to note, and you could see some price action there.
Yeah, so okay, so that that's on TCS. Frankly, maybe we'll ask some experts because like Tamanna said, yes, it is par for the course if you're doing business in the US. Does this bring about a reaction ahead of the results? Let's wait and watch. Just one more on my mind before we move to other stocks and brokerages. But Shivalik Rasayan, I thought was interesting. US FDA inspected the facility, API facility. APIs are really hot right now. They closed inspection with 7 observations, but they're procedural in nature. In some sense, this might not be that bad a deal for Shivalik.
Yeah. Speaking about the pharma space, Lupin is another one definitely to watch out for today. So they've launched their first generic version of something called Orasia in the US, and I looked it up. I was interested in knowing that what those medicines actually do. So this is for inflammatory lesions for adult rosacea. So basically a skin condition. Fairly big market, and in that rotational sort of movement in all of those pharma stocks, Lupin has been okay so far. Up about 14% of the last 3 months.
Also because it's had such a great rally, right?
Yeah, so but last month also is just 4% down.
Yeah, but the previous 12 months, it's just been that rank out performer, and hence maybe. Who knows?
Perhaps. 12 months you're right, about 142%. But anyway, you might see a bit of a reaction
Nomura
from Lupin.
believes. So Sayan Mukherjee's note says that generic Oracea launch is a big feather in the cap for Lupin. So could be interesting.
Yeah. So Lupin is one that you should definitely put on your watch list today. I just wanted to revisit Godrej Properties because there's a Jefferies note on it, and that was the stock of the day yesterday. They've maintained a buy and have a price target of 3,175. So that's nearly a 18%, 17% upside. They say the pre-sales figures that they've given, 22,500, is the highest among listed developers. And they believe, this is Jefferies, that Godrej Property can see growth over high base because of their Hyderabad entry. So they're expanding intelligently. FY25-26 estimate pre-sales have been raised by 25%. That's for FY25 and 19% for 26. They expect P&L margins to scale towards 15 to 18%. So that's also good. And they say it'll stay in the upper end of their guidance. Remember, they have actually topped what they had aimed to do. So you could see, maybe a continuation on Godrej Property. Anyway, real estate stocks have been showing, that kind of a movement. CLSA also on Vedanta, I think, could be a bit of a positive. They've upgraded them to a buy from an underperform and target price of 390 versus 260 earlier because of a benefit of the commodity cycle.
Yeah.
So, yeah.
That EBITDA uptake, the company is guiding for the group EBITDA to rise from $5 billion, and Vedanta's was about 4.7, to 6 billion and 7.5 billion by FY25 to 27. Now, if indeed, if the company's guidance is anything to go by, from 5 to 7.5 in 2 years, a significant uptake. And commodities we know are hot, so it would be interesting to see what Vedanta does in the session today. In fact, as you spoke about Jefferies, they've written on metal and mining, and they're saying that there's signs of a rising tide. They have increased the target price on Tisco, which is Tata Steel, to 200 from 165, Hindalco from 610 to 700, JSW Steel from 800 to 900. So metals in the hot spot in the session today. Certainly a sector to watch out for.
So once again, metals in the hot spot today. So some interesting names over there, and of course, many more that we'll watch out for. But what's the focus for Editor's Cut?
No, just before that, a couple of other brokerage calls before we wrap this up. So Bharti Airtel was an interesting one. It's been rated a new buy at Antique Stock Broking. The price target set at 1505, which is a 25% increase from last price. Now, yesterday we were seeing those, some of the unconfirmed notes, of course, about how Vodafone is talking about uptick in tariffs and ARRs post-elections. Now, if Vodafone is to enjoy that, Bharti Airtel certainly will enjoy that. So that's one to watch out.
My only concern with this whole uptick in tariff
is for you and me?
Conversation, no, it's a pipe dream. I'm hearing it for ages and ages.
Tariff hikes, no, but ARRs have certainly gone up.
ARRs have, but not because of tariff hikes, because of more usage, and especially on the data side of it. My point is, who will blink first? Right now, between the three players, Vodafone is just trying to sort of get its socks up and get itself off the ground.
Yeah.
But the real fight between a Jio and a Bharti Airtel, who blinks first and actually increases those tariffs?
Yeah, but interesting. So this note would be worth dwelling a bit more on. I'm guessing at some point of time in the day or on the show later on, we'll probably do that. And Kolte Patil is interesting. Motilal has rated it a new buy. Motilal has also given a note on MCX, if I'm not wrong, but Kolte Patil was the one that stood out for me. Price target set to 700 rupees, which implies a 35% increase from the last price. So watch out for some of these brokerage-based names as well. Could be interesting in the session today. But Tamanna was asking about what's on focus on Editor's Cut. I'm going to hop across to Agam, and the two of us are going to talk about PSUs, Agam, isn't it? And what better time to talk about it than elections?
Yeah, in fact, that is what we're going to talk about. How PSUs have done before elections, what they have done through the course of the elections, and can we draw out some trends based on that? And when we talk about PSUs, we're not talking about banks, we're talking about a whole gamut of public sector companies beyond the financial sector. And we've seen some pretty interesting trends playing out here, Niraj.
Yeah, I mean, I love your thoughts here, but I've borrowed some of this data from a story that our colleague Chinmay filed, so you can actually log in and read up that story as well. It's got some of these data points, but you know, the only closest resemblance to March, or rather May or June 2024, if you will, is what happened in 2019, because it was a year of re-election, and therefore we've only captured data from 2019, haven't gone back to 2014. There was a slightly different period, so excuse us for that, viewers. But from March to May 2019, which was the period where the verdict came in.
Right.
So what me and Chinmay tried to do was look at the 2-month period before the verdict. Right. Which is where the election season is in full steam. So Nifty PSE actually gained quite significantly from March to May 2019, not quite significantly, but it had, because it had done a little bit ahead of that. So 7.2% Jan to March 2019, and therefore March to May was about 0.5. And a lot of these very popular stocks, you know, the railway stocks, which were the first darlings of the market the whole of last year, actually had a bit of a corrective move. So if you think of it, some of the more popular names actually had a pullback in that period. So if you're trying to bet on how some of these most popular themes will actually do well, be mindful that the last season, Railways, Container Corp, Ircon, etc., or Titagarh, etc., didn't have that great a run. Right. So that's to be kept in mind. But you could argue that railways have only come into flavor in the last 12 months. So that argument is valid. So then let's look at some of the others. So, and again, please interject wherever your thoughts are, Agam. I'm just moving ahead as the graphics are. So then I looked at some other fertilizer names, because usually people say, oh, fertilizers, there'll be something on the policy, etc., maybe in the budget, so on and so forth. So just choosing again the March to May period, and then the Jan to March period, the 3 months preceding. So most of the fertilizer names as well actually didn't have a great run ahead, and didn't have a great run during that 2 month as well. Now, if that is any indication, again, you could always argue that the fundamental factors were different and the scene was different there, the sentiment might have been different there, so on and so forth. But this is hard data. And data suggests that if there is one pocket that you should not try and preempt during the election season, it's fertilizers.
Right, absolutely. So, a couple of questions. Firstly, Niraj, you know, it's about defense companies, because they have run up so massively ahead of elections that perhaps becomes the most interesting, you know, sector here. And valuations at this point in time, people are saying that it's okay, you know, because of the kind of visibility that they have going forward, valuation is going to take care of themselves. Still, there is, of course, once again, there's an indication that the budget is going to be a big bang budget this time around. And because of that, there's going to be a lot of anticipation around defense companies. So how do you think that things could potentially pan out, given the fact that they've already run up so much? And it's the same for fertilizers, by the way, because fertilizers, once again, will be in focus for the budget. Yeah, so you could argue that fertilizers, because data is suggesting that even if they've had a run-up, or if they have not, in the preceding thing once, which is Jan to March, they've fell the last time as well, and some of them didn't do well any which is before. And I don't know if there is a policy indication out here for fertilizers this time around as well. So let's leave that out. Defense is interesting for more reasons than one. So if you look at 2019, Agam, and correct me if I'm wrong, but at that point of time, defense was not in so much of flavor either, fundamentally. The stocks had a good run Jan to March 2019, and then followed it up with a very strong performance post that as well. Garden Reach, BEL, BDL, Midhani, BEML. You look at the performance that some of these stocks had, and Garden Reach was up 7% Jan to March, up 19.8% March to May. BEL 6.9% Jan to March, 12.7% March to May. Even BDL, which was up about 4.5% Jan to March, followed it up with a 5%. So as much as the market may have thought that these stocks have run up, they actually had a fairly good move after that. And you know, I was reading this Bloomberg story overnight, wherein, and me and Tamanna were talking about it on the trade setup as well, that this story says that would the European nations have to rethink what they have thought about wars and defense spending, because hitherto they have spent, I think the story quotes about $2.2 trillion or thereabouts. Correct. I may be mistaken here and there, but just humor me for the time being. Effectively, they are saying that the high spend that they have done
is nowhere close to what they would have to spend
Right.
if we are returning to the Cold War era, because Russia is knocking on Europe's doors, China is tugging at the heels, and there is Middle Eastern tension. So if all three put together, the Bloomberg analysis estimates that spending, the total spend, would have to go up 5 times.
Right.
Now, India was not a part of the global supply chain linkages back in 2019,
Absolutely.
but India is firmly a part now, right?
Now, yes.
Your conversations with companies would have suggested that. My conversations are suggesting that as well. So if that is indeed the case, could higher defense spend potentially globally also mean positivity for Indian farmers?
Yeah, and I totally take your point there, Niraj, because when it comes to defense, the kind of traction that they are seeing when it comes to export markets as well, and there has been increased activity from exports. It's not that the Indian defense sector only caters to the Indian government anymore. That's certainly not the case. And again, we need to keep an eye on the kind of big bang budget, announcement that can come through. Of course, let's not forget the indigenization, movement that we've seen over the course of the last 5 years specifically, which is why defense maybe was not as much in focus back in 2019 as much as it is now, because in the course of the last 5 years, we've had about 3 or 4 indigenization lists already, and there's expectation of more to come through, backed by Atmanirbhar Bharat. So that's something to keep an eye on. I just wanted to make another pointer when it comes to fertilizers. A lot will also depend on the summers, the kind of impact it has on crops, as well as monsoons going in. And I reckon that based on that, maybe the government will take a lot of those factors into consideration, and then perhaps make their whatever amendment they have to when it comes to the budget. So sure, it is in the hang, the fertilizers, but defense is certainly something that we're going to keep an eye on.
Most certainly.
Yeah, well, there you have it. That's how things have rolled in the past, but can we expect the same in the future over the next few months? That's a wait and watch. But on that note, it's a wrap on this edition of Editor's Cut. Niraj, thank you so much for getting us those details here. But don't go anywhere. On the other side, we come back with F&O. I will take you through all the cues, and then we'll have an expert as well to guide you through the day. Stay tuned in.
Welcome back. You're watching India Market Open. Quick look at the implied open before we get to the F&O side of things. And we're looking like we're set for another positive start, which is absolutely optimistic considering that we closed pretty much flat yesterday and no great shakes when it comes to global cues either. But what are the cues when it comes to the F&O end of things? And Agam, today is an important day in that sense because it's ahead of market holiday tomorrow for Eid. And you have Nifty expiry and Bank Nifty expiry as well.
Yes, absolutely, Tamanna. That's going to be a crucial factor here. And both the aspects that you mentioned will be something that is going to play out in the markets. The fact that they have two expiries today, as well as the fact that tomorrow is a holiday. But let's take a look at how things panned out yesterday. Well, we started off with a bang. We started off at new life highs, and eventually we saw the Nifty peter off, eventually closing marginally in the red. But there has been increased open interest as far as the futures are concerned. The Bank Nifty futures looking at a very little bit of unwinding coming through, but this one is also inching back towards 49,000. Do we get to see it today? That's a wait and watch. But moving on to the options market. Now, we did see a flurry of activity around 22,700 yesterday, and which is why we saw a lot more writing around the 22,800 call as well. But mind you, the 22,000 put was just as active, the 22,800 put, pardon me. And where does it stand when it comes to your overall open interest? So we have the 23,000 call as the one with the maximum open interest. It is unlikely that we will see the Nifty go all the way to that particular mark, but never say never. That said, on the lower end, we're keeping an eye on 22,500 in terms of what markets perceive as a little bit of a support. In terms of the Bank Nifty, we saw the Bank Nifty once again edge higher and higher around 47,700, 800, and for now 49,000, pardon me, is something that we're going to keep an eye on because that's where we do have significant amount of call open interest. Moving on to stocks, we do have a lot of longs in Hindustan Copper, Metropolitan, Canfin Homes, Bata and REC looking at shorts. And for stocks, we just saw unwinding, short covering largely for Eicher Motors, Dixon, InfoEdge and SAIL. But the question really is, what do you do with all these factors that we have observed over the last few days, and what can you in fact take away from that? Well, let's get in our expert opinion. We have Aditya Arora of Analytics Research who's joining us on the show. Aditya, good morning. Thanks for joining in. First, your view on the benchmarks. How are you playing this truncated week? What's your positional sense?
Very good morning. I think now markets looks good because FIIs are building positions longs over there. So we are getting some confidence that probably every dip is a buying opportunity, and on the global front also markets are doing well. So both the things are in sync. Picture looks good. So my view is neutral to bullish on the market, and I think market would have decisive breakout. Nifty would have decisive breakout above 23,000. Or early signs we could see at 22,800, and on Bank Nifty front, I think decisive breakout would come at 49,100. Once these levels are crossed, I think market would go up with momentum, and we could see 500 to 1,000 points on Bank Nifty easily. And in Nifty, similarly, I expect 200 to 500 point of move once this level is taken out of 22,800.
Let's talk about stocks then. I believe the first one on your radar is Petronet LNG. Can you take us through that?
Absolutely. I think Petronet LNG is outperforming since last few days, and I think yesterday also we saw a good move. I think a good move can follow up over here. So Petronet LNG 285 call is a buy at 10.15. 300 call is sell at 4.95. Maximum loss is 15,600 and maximum profit potential is 29,400. And okay. I have a second one as well.
All right. Aditya, before we go on to the second one, that is Hindalco, very quickly, of course, Aditya is looking at a 1:2 ratio where 1 is your maximum loss and 2 is your maximum profit on Petronet LNG, playing on the upside, playing that spread. But right, Aditya, we were talking about Hindalco as well. Can you take us through that one as well?
Sure. I think metal space is the best space to be in the market right now. It has good momentum. It has long build up in the data. Globally, setup is pretty good. The commodities are doing well. Aluminium, copper, zinc, and everything. Even precious metals are buzzing, and they have given blockbuster returns. I think Hindalco is still not trading at 52-week highs, and a good breakout is pending over there. We have just cleared the gap, the huge gap which it had created. Now the momentum will come. The hurdles are crossed. Now the momentum will come. So 590 call could be bought over here at 15.70, 7.95 the stop loss. Maximum loss potential is 10,850, but maximum profit potential is 17,150. So it's a bullish strategy. If the stock goes up, who constructs a strategy makes money, good money.
Okay, there you have it. Well, another bullish structure, option structure playing out in favor of Hindalco. Aditya, on that note, thank you so much for joining us and taking us through your views and handing us a couple of trading ideas. And with that, it's back to you, Niraj.
Thanks for that, Agam. And those are some interesting ones on the option side. What we'll now do is take it forward on the technical and the futures side as well. Derivative, futures, as well as fundamentals. And I think let's talk about that in detail with Akshay P. Bhagwat. He's Senior VP at JM Financial, joins us right now on the show. Akshay, great having you. Thanks for taking the time out and being with us. We're seeing mild bouts of profit booking at higher levels on various indices, including the Bank Nifty and the Nifty yesterday. Is there a concern, or do you think this is a pause after a fairly brisk short-term up move that we had, and is the trend still higher?
Good morning, Niraj. If you look at the broader trend, it is still strong, and the way the chart setup is, the chances are high that Nifty is aiming for the level of 23,000 in this expiry itself. Now, this is a holiday shortened week. Next week too is a holiday shortened week. So, a lot of holidays off. So, my sense is that, traders are taking things step by step as it goes. And there is a good chance that there will be a slight bout of profit booking, maybe in today's trading session, considering the fact that today is the expiry for the indices, both the Nifty and the Bank Nifty. Technical parameters still suggest strength. So 22,500 is a strong base, which has been set up by the put writers who have positioned themselves very strongly for today's expiry. And on the upside, 23,000 is where I see the Nifty heading. So small jerks, even if you get during the day, should be used as opportunities to buy the Nifty till Nifty is about 22,500. All is well, and the index should aim for the 23K level very soon.
Akshay, very good morning. Tamanna over here. Let's start with your top picks this morning.
Good morning, Tamanna. So the couple of picks which I have for the viewers. The first one is Bajaj Finance. If you look at the chart structure of Bajaj Finance, there was a very strong up move in this stock a few trading sessions back. Has been in a consolidation mode lately, but the broader setup is suggesting a target of 7,400 plus in the short-term time frame with a stop loss of 7,124. So buy Bajaj Finance. That's the first recommendation I have. And the second recommendation would be in Lupin, which is from the pharma space. Again, a very strong technical setup. It's around its chart base and is ready to launch for the next round of momentum. I would target around 1,657 on the upside with a stop loss of 1,582 in the buy trade in Lupin. So Lupin and Bajaj Finance are the two top picks for the viewers.
So Lupin and Bajaj Finance is one to look for. We've talked about Lupin in our trade setup as well because they have got now approval for Oracea, the generic version in the US. Now, more stocks to watch in trade today, and Mahima is joining us with that list. Yes, Mahima.
Right, Tamanna. So I'll start with Insulation Energy first. Well, they came out with the business update and FY24 consolidated revenue is up around 164%. Now, they usually give semi-annual updates, and this is their final year-end update where the revenues stood at around 738 crores. Now, if you see for H1 FY24, they clocked a revenue of only 142 crores, whereas for the second half of the year, they've clocked a revenue of almost 596 crores. So it's almost a 400% plus revenues that they've clocked in H2. Now, the revenues have come from solar energy, and the March month itself gave a revenue of around 104 crores. They've also given some kind of guidance on their expansion. They're saying that they want to increase their solar manufacturing capacity to 3,000 megawatt and the aluminum frame manufacturing to around 6,000 metric ton per annum. Moving on, the next stock that is on the radar is Shah Metallics. They've announced an expansion into stainless steel flat products. They have established new facility for this, and the facility is near their existing facility in Odisha, and the capacity will bolster to around 0.3 metric ton per annum, and they've also applied for a land acquisition for around a 20-acre land, and recently they've acquired Mittal Corp, where which is a dedicated downstream product into the wire rod division. They've also said that they want to establish stainless steel bright bars capacity of around 25,000 metric tons per annum. The next stock on my radar is Pesalo Digital. They came out with a business update where the asset under management grew by around 32% year on year. The disbursements also grew by around 38%, and co-lending loan disbursements have seen a growth of around 100%. Overall, their customer franchise is also grown by 3 times in this FY24, and the geographic footprint has also doubled. So these are the key 3 stocks which will be on the radar for trade today.
All right, those are some of the key stocks, and among them also Pesalo with those updates that have been coming in. Akshay, any take on a Pesalo and others in the financial space? IndusInd also on the news list today.
If you look at IndusInd Bank, if I'm not mistaken, right?
Yes.
Yes. IndusInd Bank, as it closed yesterday, it closed at a very vital resistance zone, which is more valid from intraday or a short-term trading perspective. The level is 1575. So that's an important zone because there have been 3 attempts where the prices have met resilience around these zones. So I'd be a bit careful at the current level for taking a buy bet on IndusInd Bank. Let it cross 1575, then it qualifies as a buy trade for significant upsides till 1700. At this point, I would wait for that breakout above 1575. If it doesn't break, expect a slight consolidation or a cool off till 1525. So wait and watch in IndusInd Bank, let the levels breach, and then take the buy trade as per the levels.
Okay, so that's on IndusInd Bank to be watched out for. We have this note from, we have this call on Hindalco. But aside of Hindalco, there is this note that we have from Jefferies today on metals and mining, which we were talking about. They are talking about a signs of a rising tide. And they say that the recent recovery in global PMIs, including in China, is driving optimism for a potential acceleration in demand growth for commodities. The Jefferies Global Metals and Mining team remains constructive on the sector with preference for copper and aluminum. They have increased EPS for Hindalco by 9 to 15, which is a stock that Akshay was talking about. But their preferred buys are Coal India, followed by Hindalco and Tata. Now, Akshay, while Hindalco is presumably your favorite today on metals, I want to bring out Coal India as well. We know that it's a power deficit year. We know that coal mining activity will be thriving and demand will be very, very high. And there is a return to unclean energy, if you will. So fundamentally, the stacks are out there. Do charts or the derivative positions by any way suggest some optimism on Coal India?
Yes, Niraj. In fact, if you have a slightly longer term view on Coal India, the chart setup is extremely positive. It is just that from a short term phase, the stock has gone into a time correction zone. So you see, since the last 1.5 months, it's been consolidating, confined in a price range of probably around 420 on the lower end and 480 on the upper end. But my sense is that this consolidation should soon make way for a strong positive breakout. The volumes are good. Delivery volumes are picking up. So consider this trade more from a positional perspective, giving this trade minimum 1.5 to 2 months time. You will see targets of 500 plus in Coal India within that time frame. The support zone is around 415. That's the support, and the stop loss should be below the support. Target 500 plus in Coal India from a positional perspective. So a positive view on the stock.
You know, this news flash is very interesting. Now, I'm presuming that Ramco Aviation and Ramco Systems are connected. We still need clarity there. But Korean Air has signed a multi-billion-dollar deal with Ramco Aviation for tech transformation. There are these hubs in India which are doing these aviation-linked systems. We know that for a while. I'm forgetting the name of the company in Pune which does this. There's Ramco which is doing this.
So does Tata Tech to some extent.
Yes.
Yeah.
So this is very interesting that is a multi-billion, multi-year deal that Korean has signed with Ramco, because from a Ramco Systems perspective, this could be meaningful for the company. I'm presuming this is in the same listed entity that some of these things are there, whether it's systems or industries, I don't know. But I presume that this would be under Ramco Systems. And if that is indeed the case, then this is a big, big positive. Somehow, something tells me it may not be Ramco Systems, Tamanna, because the quarterly results to the tune of 150 odd crores belie the size of a company which can sign a multi-billion-dollar deal, but I may be wrong. We need to do our checks. So because we've tagged Ramco Systems, I thought I should just bring out that point that if it is Ramco Systems, it's great news. But the size of the balance sheet may suggest that it may not be systems, but some other private entity or otherwise. Time to see.
So one which is definitely worth checking on. But meanwhile, you know, we've been talking about the metal space, and actually you've talked about some of those counters. Hindustan Zinc and Hindustan Copper completely buzzing in trade yesterday. You've got a positive note that Niraj was talking about earlier on the entire metals pack. Vedanta has seen an upgrade by CLSA as well. Just your specific take, though, on zinc and copper, Hind Zinc and Hind Copper to start with, Akshay.
Hindustan Zinc, no stopping the stock. The way the momentum is, it was absolutely all guns firing yesterday. It's a strong breakout, as I see on the charts, which we saw in this week. So the breakout zone somewhere is around 350, 360. That's a very strong and a positive development, especially if you are a positional trader or even if you are a short-term trader, the momentum is very strong. So my top pick from the metal space would be Hindustan Zinc, which closed around 398 yesterday. This stock is setting up for a positional move for around 430 to 450 on the upside. The support zone is 360. Even if you are taking a short-term bet, you can get levels of 415 very soon. So Hindustan Zinc would be my top bet on the metals pack, and buy this at current rate for targets of 440 to 450.
Okay. By the way, so just moving tracks a little bit and trying to talk about stocks which haven't done well. Because yesterday, while a lot of stocks did well, some did not. And Reliance Industries was right up there. The stock, after doing well the previous day, kind of cooled off a little bit, right? Down about 1.5%. Now today, there are some newspaper articles which are talking about how Tesla might be looking at a partnership with Reliance to set up shop. If that is indeed the case, could it be a positive for the big boy is the key question. But are the charts showing that as well is the other question. Now, Tamanna, I find it interesting because we do not know the nature of the partnership. Obviously, we'll not know because this is an article. We don't even know if it's happening. But if it is happening, what's the kind of partnership that they might be looking at, etc. But there's two large companies coming together for setting up shop in India, which to me, as a news bit, is very, very interesting.
Absolutely. I mean, you're talking about RIL and Tesla, right? So there was a statement from Musk a couple of days ago in a different context altogether, saying that the next logical step is for me to come into India. And there's just been such a long wait for this. It's kind of reminding me of IKEA a little bit. over decade wait, IKEA will come, what will it do to the Indian market? And fine, it's done okay, but I mean, has it really moved the needle for the way Indians furnish their homes? Not saying that the same thing is going to happen with Tesla. It's a prestige project. But in terms of...
This glass is IKEA. I was just curious.
no shade on IKEA.
I
love their stuff.
I know what you're saying.
But I'm saying that Tesla, with its limited number of units, will be a prestige project. And okay, yes, you can drive a Tesla in India. Where will you drive it? Will the average Indian buy it? Will the car user buy it? I think it's exciting. It's a great headline. I'm just saying let's temper it with what it actually means for Tesla in India. It's a tough market to crack.
Most certainly, as it should be. I mean, we deserve the tag of being tough customers because we have the right to be so. Niraj Joshi, isn't it? Good morning and thanks for joining in. What's your sense on this whole Tesla setup and what it would do to the ecosystem, whether they do it with Reliance or somebody else? What are the kind of suppliers that they choose is another factor altogether. How do you play this at all, Niraj?
Morning, Niraj. And absolutely, I think it's a big news in terms of automakers in general. And if you probably are looking at the entire ecosystem, I think the ancillary space to probably support the kind of growth engines that electrical mobility can probably pose can be huge. So to that extent, I think the kind of sourcing that might happen in-house within the country itself might be a propelling factor for good quality ancillary companies. So yeah, I think it is a good boost for the industry as well.
Right, absolutely. Now, whether it will move the needle in terms of car, sales in India is a longer discussion in any case. Mayuresh, very good morning. Tamanna here. Are you liking the banking space once again today? Axis has been interesting. IndusInd has a bit of news. Would you be looking at BFSI today once more? BFSI and IT, or expand that horizon?
Morning, Tamanna. So to a large extent, if you probably look at how the stack up is happening, large cap banks are probably looking far more attractive from a risk reward perspective. And even from a valuation matrix, the space probably looks very, very interesting at this juncture. Obviously, a few large cap banks, case in point, HDFC Bank, a couple of quarters had seen slower deposit growth. They've started clawing back in the update that they've probably given for Q4. But a large part of the expectations within the system is a reasonable amount of advances growth expected to take place. Deposit growth should be reasonable as well, which probably takes us to a base case scenario as rate cut starts happening in the second half of this calendar year. The NIMs and spreads should normalize. And with expectations of normalized credit growth, the CD ratios improving and normalizing, asset quality pressures are off for the entire banking system as a whole. And with the kind of risk management practices that they probably have in place, our take is that it should remain that way. Having said that, the expectations in terms of solid earnings growth might continue for the larger names. And therefore, on our watch lists, Tamanna, this space definitely remains on the radar. ICICI Bank, to a certain extent, if these are large cap names, IndusInd Bank probably stay on our radar as well. And so do selective NBFCs, because if the scenario has to play out for banks, the NBFCs should also start incrementally benefiting as well. We were just discussing with Niraj about the real estate cycle. I think the proxies to this would also be housing finance companies. And to that extent, on our watch list is also a stock, PNB Housing, where our take is the kind of retail spread that it has. The expectations in terms of solid growth happening on its balance sheet might very well continue. So I think being a little bit selective, but positive on this space.
Any ones among the NBFCs that you like relatively more, Mayuresh?
Yeah, so I just mentioned, I think the housing finance names, PNB Housing.
PNB Housing is something that you like as well. We talked about the real estate play, and Akshay, I just wanted to understand what you would do with the Godrej Properties right now. It did well yesterday. There is, positive brokerage notes on it as well, a Jefferies note on it today. Would you buy in at these levels?
Godrej Properties on the technical chart is a bit overbought for comfort. In fact, if you look at the close yesterday, it's more of a short-term reversal candle. So there is a good chance this stock might see a temporary round of profit booking. I would be more comfortable to take a buy bet on this at a slight dip. Around 2650 odd levels would give me more comfort in taking a buy trade. So wait for a dip of 50 to 70 odd points from the current market price. A slight correction makes it more a good trade from a risk reward payoff perspective. 2500 is the stop loss and 2900 positionally is the target area I look forward in Godrej Properties.
And well, since we are talking of real estate and properties, Motilal Oswal has initiated coverage on Colte Patil today. Or overnight, let's put it that way, with a buy rating. Anushi Johnson with the details. Anushi, are they cautiously optimistic or are they very optimistic on Colte Patil?
Right, Niraj. So if you look at, they are implying about a 34% of an upside over here. That is Motilal Oswal, which with a target price of about 700 now. So a couple of reasons, strong reasons that they have come out with. Firstly, just a little bit of background on Colte Patil. It is a leading developer in the Pune region with a growing presence in the Mumbai and the Bangalore regions. Now, so far, what the brokerage is essentially seeing is the company had already delivered about 26 million square feet of land and in the last 3 decades and now have about 43 million square feet under development. If you had to look at the company's pre-sales CAGR growth, also about 36% in the FY21 to 23%. Well, this is a strong growth number after it had a stagnant decade overall. So they are seeing the company continuing on to this growth momentum over here, expecting about 25% of a CAGR growth between FY24 to 26 in the medium term. Now, this would be supported by the company's robust cash flows it has had and a healthy balance sheet with which they are able to sustain and target these key launches and growth projects that we are to see. Now, if you have to look at the company's profitability also, now this would be on a bit of a has been on a bit of a lag, but they expect the profit margins also to improve from 9% to 17% going forward. On the downside, on the risk, only one factor which we should keep a watch out for is if there is a slowdown in the demand momentum we are seeing, then there would be some changes in the pre-sales estimates that the company has made. So this is what Motilal is seeing about a 34% upside on the stock.
Well, 34% upside on the stock. Watch out for Colte Patil. While Godrej Properties is a favorite for a lot of people, watch out for Colte Patil in the session today, though a 7% uptick already. Okay, we amongst the list of voices that you will hear today is a very prominent voice, and the view seems to be that while India has had a tale of growth extending to over 10 years than just 1 or 2 years, that is the positive, and that's the word coming in from Bank of America's Savita Subramanian, who is the head of US equity and quantitative strategy of BofA Securities. She believes that India is a better pick than China right now amongst emerging markets.
China it's harder to invest in today, given a lot of the geopolitical risks, the tech wars. So I think that India fills this void of positive demographic trends, an emerging middle class consumer, a more affluent, an appetite for more affluent, higher price point retail. So I think that that's a growth theme that's very important. And then when I talk to our India equity strategist, Shah, his view is that this infrastructure that we're seeing in India has a very long tail in terms of growth. It's a 10-year growth cycle, not just a 1 or 2 year growth cycle.
Of course, you can catch this whole conversation today at 10 a.m. on World View. We need to slip into a break. Back with more.
All right, we just have seconds left to go for first pre-open rates to hit. We're expecting a positive start this morning. Akshay P. Bhagwat and Mayuresh Joshi with us. Now, while we've discussed a range of stocks that may respond today to trade, Mayuresh, just wanted to get your sense of whether you're seeing any real movement possible in the sugar pack because of this Bloomberg story that since production levels are good of sugar this time round, these companies, these producers may get more of the sweetener to actually produce ethanol. Do you see that as having any great interest or impact today?
It might, Tamanna. I think the entire perspective why sugar stocks corrected was obviously the government directive in terms of no longer being able to use sugar in terms of their ethanol blending. And therefore, I think the kind of capacities that most sugar companies have created, Balrampur Chini as an example, 1050 KLPD, which produces almost 35 crore liters. You've got Dalmia Bharat, which produces 23 crore liters, as well as Dhampur Sugar, which has a 350 KLPD capacity as well. So a lot of incremental capacities have gone into the distillery operations. And if they get impacted, obviously, I think the plants do not function at optimal capacity, and numbers are expected to be relatively lower as far as Q4 is concerned, and to a relatively large extent Q1 as well. So I think what the sugar companies are probably looking at is that the directive change might happen post-elections. But with the expectations of a bumper crop, as one is hearing, the expectation, if sugar is probably reverted back to ethanol, I think there will be respite in some sense as far as Q1 numbers are concerned. But earnestly, I think the policy direction might change and should change after the elections are over. And once that happens, I think it's just going to be normalized quarters Q2 onwards as operations start coming back to their average kind of numbers pre the ban that probably came through for ethanol. Obviously, the prices have also increased in terms of the B route and the C route as far as the distillery operations are concerned. And to that extent, numbers should be relatively better in the second half. So I think it's a take in terms of government reversing its policy post-elections and numbers reverting back to mean. So I think it's just an expectation that Q4 numbers will be relatively
I don't know if it's a valid expectation that government will reverse its policy post-elections. Anyway, the new rates had to come into play in about October or so. But you might see, like you're seeing initial a little bit of response in some of those sugar counters. What's really buzzing though, LTI Mindtree doing really well this morning. Hindalco again, some of the pre-open rates are hitting. Hindalco Metals once again shining. I'm seeing some movement in consumer facing companies which have been missing for a while. Look at an HUL, an Asian Paints, even a Titan was doing fairly decently. And of course, these rates will now settle. IndusInd Bank is something we spoke about. It opened up, pairing off a bit now as we speak, but not doing too badly. Tata Steel also with a decent morning over there. Overall, indices are fine. Nothing great to speak about. We are above the 22,700 levels, yes, but no fireworks in at least the first few minutes. Akshay, what would be your, calls once the pre-open rates have now hit? What would be your top two calls, and would any of those be in the sugar space?
Sugar space I'm not very keen on it because the volume action has still not is exciting enough to see a buy trade from positional perspective. So sugar, I would like to avoid it as yet. On the buying front, as I mentioned in my opening trades, Bajaj Finance is one stock which I would be keen on taking a long bet. The setup is extremely positive, and this stock from the NBFC space has seen a good recovery lately, and expect this this recovery to continue for 7,400 plus. So consider buying Bajaj Finance for targets of 7,400 with a stop loss of 7,174.
Okay. Well, wonder if Ramco Systems is reacting at all in the first few minutes. Maybe it'll take time to react, but the news flow, if it's entirely captured under the listed entity Ramco Systems, could be very, very impressive. 7.5% higher, but this need not be it if indeed it's indeed a multi-billion-dollar deal. So I think it's important to watch out for this one. It's important to get clarity from the management, I would reckon. So do keep an eye out for that. Protea and eGov is the other one on which there's a block deal on offer today. It'll be interesting to see what that stock is doing, if anything at all. Ramco is reacting. Protean flattish for now. Let's see how this shapes up in trade. Niraj, any thoughts on this Protean eGov? Have you looked at it fundamentally?
Unfortunately, no. Sorry.
Okay, no problem. In terms of movers today, after a few days, Sun Pharma Advanced Research is possibly showing some signs of a pullback. Has been on a big uptrend in today's session. Seems to be just starting off a bit lower. We'll wait for these rates to settle down a little bit before we talk more about it. Okay, some other newsmakers. There is from amongst the brokerage calls, Bharti Airtel, which has been rated a new buy at antique, price target about a 25% upside from the current prices. Be interesting to see if fundamentally and technically Bharti looks set for an uptrade. Akshay, can I ask you on Bharti Airtel, recent moves that have happened, does it make the stock attractive?
Yes, on the charts, this stock definitely is attractive. It's been in a very strong uptrend. Lately, there's been a slight consolidation, fall in volumes in the last few trading sessions, but the sense is that this stock will regain the lost momentum. It will cross 1,300 in the short-term time frame. So I'm positive on Bharti Airtel. You should be buying it and even having it in your portfolio, considering the broader price setup in this stock. 1,300 is a short-term target. The broader or long-term targets can work as high as 1,450 to 1,500. Support zone is roughly around 1,080 if you are a positional or a long-term investor in this stock.
Okay. And Niraj, quick thoughts on Airtel? Airtel, whatever it is, would you buy them?
No, continue holding, because I think the momentum probably remains very, very strong as far as numbers are concerned. The expectations, again, largely is pegged on the fact, Niraj, that at some point of time there will be ARPU increases, which will happen. And if that happens, the entire stress that happens on the balance sheet in terms of incremental investments that are towards the 5G ecosystem, I think those concerns get allayed to a large extent because free cash flows become a relatively more realistic number rather than something which is perceived just on Excel sheets. So that ARPU increase is something that the street is looking out for. It should come through at some point of time, which might give some respite as far as the balance sheet is concerned. Anybody holding should continue holding.
Okay. Well, let's talk about the key brokerage notes on that note as well. Harsh, my colleague Johnson, to talk about the one or two key notes that have stood out for him this morning. Harsh.
Well, good morning, Niraj. You're seeing Vedanta, very, very interesting note coming in. Metals continues to be the buzz at the moment, and the CLSA upgrade on Vedanta is a big one, from an underperform to a buy. Target price also shifted from 260 to 390, so nearly 20% upside even from here is what CLSA continues to view it as. In terms of the turnaround, they believe that several metrics at play, but two in particular. One, on the EBITDA front, they're expecting EBITDA to go from the current $5 billion kind of mark to $7.5 billion by FY27. And basis that, valuations therefore warrant a better number is what they are making a case for. The second piece is with regard to debt. Now, at a holding company level, debt certainly was elevated but has come off. Now, though, they're taking more debt on the holding on the listed entities books, which has started to creep up. Despite all of that, a guidance of sub $10 billion on the debt front will be watched out for. That's a key monitorable. But there's plenty of value proposition with regard to both the demerger, which the note talks about. The possible demerger and value unlocking should therefore aid the numbers. Also, the play on power should aid the EBITDA numbers going forward. So, couple of those factors yet to play out on the numbers, which should aid, of course, the debt level at the end of the day. Average EV to EBITDA has been roughly 7 times, currently trading at 5 to 5.5 odd times, and therefore there is some amount of re-rating possibility, and therefore there is value, is what CLSA continues to believe. So that's the first one. The second one is on Godrej Properties. Largely the stock of the day yesterday, Niraj, and Jefferies continues to maintain a buy. 17% upside despite the 5% spike on the stock yesterday, and what it seems to be suggesting is that growth in FY25 will sustain, given that they will be moving into the Hyderabad market as well, and that entry should aid the growth number on a higher base. FY25 and 26 pre-sales estimates are expected to be at 25% for FY25 and 19% for FY26. So very robust growth to continue on this extremely solid number that they've clocked for FY24. They're expecting P&L margins to scale upwards. 15 to 18% is the number over the next 3 to 4 years that they are looking at, and the net gearing is, which is the debt levels, expected to stay at the upper end of that 0.5 to 1 times debt equity guidance, especially on the back of larger projects being acquired. So plenty of positives. Debt, of course, will remain decently elevated, not of a concern. One-time debt is not bad, and within the guidance is what they are seeming to guide on. 17% upside from your 3100 plus the target price.
Yep. Godrej Properties and Vedanta in focus. Godrej Properties, also astonishing numbers there coming through. But, I just want to get Mayuresh's take on a Vedanta. The debt issues that overhang hasn't completely gone. And if you look at that note, it also talks about the impact of the entire commodity cycle. That stock, of course, doing decently today, up about 2.5–3% in those pre-open session rates at least. Would you bet on a Vedanta right now, Mayuresh?
No, Tamanna, I think we will wait and watch. And as you rightly pointed out, I think one, in terms of the delivery of numbers is something to be seen on how consistent those numbers will be. And they remain very, very volatile because of the commodity cycle that you just spoke about. Prices still remain at abysmal levels as far as the LME is concerned. And though Vedanta has an exposure across a lot of segments within the space itself, price realization is something which will mar the overall expectations of earnings growth. Obviously, silver is doing well, and within that space itself, silver, lead, zinc should continue a reasonable show. But I think how numbers will play out is something which has to be seen in terms of the overall context of consistency. I think within the space, what we probably got on a watch list, Tamanna, at this juncture is JSW Steel from the ferrous pack, and something like an Hindalco from the aluminium pack as well. Numbers might be on the softer side, but at some point our take is that the EPS ratings, RS ratings should start converging on the positive note. And most parameters of Cancelim are getting fulfilled for these stocks as well. So these two stocks remain on a watch list within the metal space.
Okay. There's one brokerage which is saying that the positives on from all the Vodafone stuff is priced into Indus Tower. I wonder if that is the reason why Indus is starting off very flattish today. But at the end of the pre-open session, that's the one stock on that basket which isn't quite doing necessarily very well. One that's escaped my eye, at least, I don't know if everybody's eyes, but we talk about Zomato and the Swiggy valuation and what Zomato as a stock is doing. Look at PB Fintech. PB Fintech is up another 3.5%. It's the top gainer on the BSE 500 at the end of the pre-open session. It's at 1351. I think the YTD performance of PB Fintech, I haven't looked at it, but I presume by virtue of the price that we're seeing right now, that the YTD performance for PB Fintech would be very, very strong. Yes, this year. It's had a fabulous move, 70%. Mayuresh, do you look at PB Fintech? We talk about, like I said, Zomato all the time. This one has been a wealth creator too. Very quickly, a minute and a half left.
Yeah, rank outperformer, Niraj. And again, the expectation is that one of the few companies within the digital ecosystem along with Zomato, where the expectations now are largely getting penciled in that there will be turnaround in the liquid business. Similarly for PB FinTech, I think the numbers within the space are relatively better. And to that extent, I think the kind of numbers that can still keep on growing in the next few quarters is something that is begging a lot of analysts on the street to have a belief that numbers will still keep on continuing, both at the top end and as far as the operating performance is concerned. But yeah, rank outperformer at this juncture.
PB in FinTech has announced that it's incorporated a wholly owned subsidiary, PB Pay Private, in an exchange filing. Not sure if that is causing the stock to move up. Akshay, very quick take on PB FinTech on the charts.
On the charts, this stock is all set to cross its lifetime highs, which we saw in November 2021-22. 1500 is that level from where post-listing we did see a correction. So 1500 is what you should be targeting in PB FinTech very soon. 1200 is the short-term support base which the stock is setting up.
1500, did I hear Akshay say that? And well, why not? But clearly, the stock has done well for itself in the recent past. The pre-open rates having settled higher is a positive. The question is, will we build on from there? I think we'll know it during the course of the day, but how we're starting off, know in about 15 seconds. Look out for action on banking, but more importantly, the metal names. I think metals deserve all the mention that they can today, simply because of the kind of optics that we're seeing globally in commodities and some specific stocks doing their magic the last few days. But here are the first rates. Well, about 1/3% in the green, not bad. Banks may be quiet today yet again. Yes, quiet, but maybe the Nifty metal index could be interesting, about 1% higher. So not surprised with this move. What are mid caps and small caps doing? Let's just pull them up once. About 1/3% for the mid caps as the markets are just cooling off a little bit. 1/3% for the small caps as well. So it's metals all the way. Pull up the heat map and let's see if some of the metal names are right up there. Yes, they are. Hindalco and Tata Steel are gaining in the session today, 1.27 and 1.17% respectively. So good start. Bharti Airtel and Reliance, both of them have news flow, a brokerage note and some news flow for Bharti and Reliance respectively. So both of them start off okay. Coal India has that Jeffries upgrade. Top pick after Hindalco, if I'm not wrong, or maybe ahead of Hindalco, either of the two, but one of the top picks for Jeffries, so watch out for Coal India as well. And there is Wipro, which is marginally higher in trade. Divi's corrects today 1.5%, so well, something went sour, but a sharp pullback in Divi's today, kind of given up all the gains that it had in effect. HDFC Bank about 1/3% lower, Adani Port marginally lower, but no big things otherwise. So from a large cap perspective, a pullback in Divi's, if you will, otherwise quiet on the losing side, but metals certainly doing well and Reliance doing well yet again along with Bharti Tamanna.
Tata Steel though is the star this morning, and some more metal and that kind of a space that we'll talk about on the broader ends of the market will also include Vedanta. We'll come to that in a bit. That has also shown some good action this morning. But I'm going to start with Framco Systems, which has a multi-million-dollar deal with Korean Air. And they put out a notice on that. The stock is really buzzing this morning, about 14% up, 13.5% up. The deal size is not massive, but in size, in comparison to the size of the company's own turnover, it's not bad at all. So you're seeing some buzz over there. Lupin is the other one. They're going to be selling the generic version of a drug called Oracea in the US. Decent market share, some incremental positive there, and the stock doing fairly okay, 2% up. We talked about sugar stocks earlier. There's a Bloomberg report that says that their availability of sugar for ethanol production might improve because it's been a good crop. A mixed kind of a bag there. Mavana's doing okay, Balrampur Chini down in the red. So not very clear if there will be a massive impact. Godrej Properties, and Harsh talked about this Jeffries note. They're bullish, but you're seeing profit booking in a stock which has gone up in the last two sessions, and a bit of that now visible for Godrej Properties as well. Fundamentally, Jefferies is quite excited about this among the listed real estate players. We were talking about Vedanta, and there's a CLSA note on Vedanta. They have in fact upgraded it to a buy from an underperform with a target price of 390. So that thumbs up is working for the stock this morning. Vedanta is having a pretty good day, 4.5% up now as we speak. And of course, PB Fintech, right before we went into the opening session, we were having a conversation on it. Our technical analyst says that he's looking at 1500 levels. It is also a newsmaker, so about 5.5% up on PB Fintech this morning. So that entire space after a while is perking up, Niraj.
Yeah, certainly some pretty crazy moves there, and I wonder if Zomato is also reacting to the Swiggy uptick, valuation in Swiggy uptick, 1% higher, so not too much. There's an upgrade, I think, on Interglobe Aviation from a brokerage, if I'm not wrong, but Indigo, I think, is inched up today, about 2.5%, 3747. If I'm not wrong, the target price was higher. Nevertheless, what else? Shah Metallics has an uptick today. Tamanna spoke about Vedanta. Sona BLW has an uptick today. And Protean, eGov, wherein about 5% of the equity has changed hands in the block deal, should come up on your screen next. That stock is up about a couple of percentage points at 1157. So watch out for this one too. There's Phoenix Mills, and Lupin is up about 1.5%. So that started off well. So good going for that. Quick opening thoughts from our experts. Akshay, I'll come to you first because Lupin was also on a call from you. Hindalco was a call from you. The markets have started off okay. What stands out, and what would you do with the top two calls? Would you still go ahead and buy them because they've started off a bit higher?
Yes, out of this, so Lupin is possibly a gap up. So I'd be keen on Bajaj Finance, which I've recommended. And one more stock which comes to my notice is Bharti Airtel, which we spoke a few minutes back. Very strong positive setup, trying to break out of its consolidation, currently at 1219 right now. This can be a good intraday bet or a short-term bet with targets of around 1275 from the next 2 to 3 days short-term trading perspective. Support is 1200, so take a buy at Bharti Airtel the current rate for intraday or for short term. 1275 to 1300 is the two target areas you can look forward to.
Okay. There's some upticks in strong stocks as well. ABB, for example, is up about 1%, so watch out for that one. But yeah, Tamanna is right. Ramco, PB Fintech, Shivalik Rasayan, which had no material observations, procedural in nature. I think Shivalik is starting off 5% higher too, so that's done okay. Paisalo Digital, with that quarterly update, is on an upswing as well. So that's the other thing that you got to keep in mind. And yesterday's newsmaker, Transformers and Rectifiers, is up another 3% today. Now, Mayuresh, I don't know if you got a chance to see that interview that we did yesterday, but here's a company which says that it has expanded margins from 7% to 13%, says margins can go to 20% as well. They're targeting a minimum of 20% sales growth, maybe higher, and they say that the landscape for growth is very strong. But the valuation's prohibitive if you look at FY24 earnings. Would you go out and buy a Transformers and Rectifiers? Have you studied it?
Not at this price, Niraj. Yes, and I did hear the management out yesterday. Two things. One, I think the entire triggers which are there for the ecosystem as a whole, as far as Transformers is concerned, I think a lot of Transformers need replacement. So that is the first trigger that will happen for most stocks. The second element is the new businesses. So mobility businesses, you're probably at new energy businesses, you're probably going to need Transformers in all these spaces as well. The third element in terms of Transformers and Rectifiers in particular, the margin expansion has been spectacular. So last quarter, 12.9%. The management very, very hopeful of maintaining that at 13-14 odd percent in the near future as well. Reasonable order book, they've bidded for almost 17 odd thousand crores, if I'm not mistaken, which gives a huge amount of revenue visibility if those orders come into the system for players like a Transformer and Rectifier. Obviously, the spectrum that they operate out of from 5 MVA to almost 500 MVA is a huge spectrum that we're probably talking about, and there's a 12,000 MVA which is dedicated to renewables that will go on stream as well, which will take care in terms of the incremental volumes and order book as it starts coming onto the system as well. So I think there are multiple triggers for stocks. Look at Voltam as an example, Niraj. I think it's crossed the 5-digit mark in a matter of time. But valuation sky high. It's way above pivot levels as we see at markets with India. And therefore, I think fresh entry points at these levels probably not justified.
Indigo is having quite a day, and I'm wondering if Akshay has a take on it. Now, there could be several number of reasons. Niraj, you mentioned a note, but also look at how market share will increase if your third largest player is going to cut down their flights. And, Vistara, as we've been reporting, will cut down about nearly 1,000 flights in the month of April. Will it be Indigo's gain? That could be another fundamental reason why you're seeing that stock 3.5% up. But Akshay, how do you like it on the charts?
The stock has taken off pretty strongly, and as I see, it's more of a momentum pick at 3750. It's worth chasing if you are a momentum chaser and believe in short-term targets. As I see, it is heading immediately for 3800 to 3825. Someone who's more keen from a positional perspective, 3625 is a good re-entry level whenever you get that dip. 3600 is a very strong support which is building up in the stock. Positionally, the stock seems to be heading for targets of 3950 to 4,000. So that's a target area with a 1.5 to 2 month perspective. So a positive setup. Consider it a buy both from short-term trading or from a positional perspective.
Okay. Niraj, before we let you go, one theme or one sector or one stock that you're looking out for this earnings season?
So I think capital goods as a space, infra as a space is still something that remain on our radar. Our expectation is that earnings should still remain relatively strong as far as this entire space is concerned. So within the bigger names, obviously we'll look out for what an L&T does, what an ABB and Siemens does that you're closing out as well. But something within the mid-cap space, I think stocks like NCC, as an example, have done phenomenally well. It was there in our portfolios. We booked out as a clear compliance disclosure a few weeks back. But we continue holding on to Engineers India because I think the entire ecosystem, as the way it is getting played out, order books are relatively strong. The kind of margins at which these orders are coming and the kind of execution that these guys are doing are getting translated in terms of numbers as well. And therefore, I think the entire perspective in terms of relatively stronger earnings still getting played out. This quarter might be a lag because of elections around. But I think over the next few quarters, I think this trend might continue, which means that the earnings perspective, the EPS ratings as we see it, will continue in a very strong fashion. So I think this space in general, EIL in particular.
Right. Thank you so much, Mayuresh, for joining us today on the show and giving your thoughts. It's seeming like an okay day, I would say, on the markets. Nothing too exciting, but we're in positive territory. So that's a good thing. Above the 22,700 levels for sure. Some movers and shakers there, but otherwise nothing very massive which is coming into play. Metals are continuing to be the top picks and the top bets for the day. Akshay, before we let you go, what would be your top two calls for the rest of the trading day?
As I mentioned, I'm keen on Bharti Airtel, the way the stock is set up for both for day trading and short-term perspective, going by the live market action. It's trading almost at its day high, 1226. So 1275 to 1300 is the target area you can look forward at to Bharti Airtel. If you're looking for a cash pick, then Zomato is one name which comes to my mind. Again, strong news flow, strong chart setup, 230, 240 is where your positional target should be. So accumulate or buy at current market rate from a slightly 1 to 1.5 month perspective in Zomato with a stop loss below 180.
Okay, fair call. So watch out for that one as to 197 on Zomato. That's to be kept in mind too. Okay, Akshay, we'll leave it at that. Thanks so much for taking the time out and being with us and giving us your perspective and your thoughts. Really appreciate your time. Time for a short break. And we'll be back with a couple of experts as we talk about a hot summer and the hot sales of cooling solution products thus far and possibly in the quarter that we are in currently. Nilesh Gupta of Vijay Sales and Kamal Nandi of Godrej Appliances join in to talk about that.
Back, you're watching India Market Open now. As the summer heat increases, it's an opportunity for companies which sell cooling solutions. This is a trend we picked up and told you about almost 10 days ago, and we've seen that play out, whether it's a Voltas, a Blue Star, a Symphony. A whole lot of these stocks have been doing very, very well. Now, the question is, are we expecting enough of a momentum through the long summer, the long hot summer? To get a sense of that, I'm joined now by Nilesh Gupta, MD of Vijay Sales, and Kamal Nandi, Business Head and Executive Vice President at Godrej Appliances. Welcome to both of you, and great to speak with you both after quite some time. Let me start, Mr. Gupta, with your take on what we're seeing. We have, of course, seen great pre-summer enthusiasm as per what has been reported and what you have said. But give us a sense of which categories this is coming in and at what price points when it comes to cooling solutions.
Good morning, Tamanna. I think the smile which you are seeing on both Mr. Nandi's and my face is telling more than half the story. So I think this year it has begun with a big bang. The last week of March was excellent, and the first 9 days of cooling products, especially air conditioners and coolers, air coolers. There's always been, in fact, for the last 15 days, we have been hearing of all the experts, IMD, talking about a very harsh summer this year, and it's turning out to be true. So what we have seen is, we have seen a sale of more than 2x in the first 9 days as compared to the first 9 days of last year. So I think we are in for a great summer, and if things go the way they've started off, then I think we'll definitely have shortage of stock this time. It's not a very good thing to say, but the way things are, I think we'll break all the records of the last 10 years of the decade. It's excellent.
Why is that not a good thing to say? I'm trying to understand. Nilesh,
no,
you don't like
that
good
means there's a
numbers?
loss of sale opportunity. Good morning, Niraj. But that means it's a sale opportunity. We should have done it planned much better.
Acha, that way. Okay.
I mean, I was thinking about, the poor people who can't afford your very expensive ACs, but having said that, it's absolutely a great opportunity business-wise. My point is that in what segments are we going to see the most demand, and sustainably, how much of demand is there? Kamal Nandi, let me come to you on that. These are significant purchases for any household, at least, large purchases. Is there enough appetite out there in your view? Are you seeing that?
Yeah, very much, Tamanna, as Nilesh has said, we are seeing this trend right from March. South markets have fired very well in the month of March, and that now we are seeing across the country. In some categories like air conditioner, definitely there is a 2x demand. And also we are seeing the same trend in refrigerators. Talking about, affordability, I think today there is easy availability of finance, and it is widespread across the country. So therefore, even for the mass segment, which was under pressure with inflation, I see, this need of cooling categories becoming necessity now, and they can avail these products and beat the heat through the easy finance route. I think that will be one of the route in which I think more adoption and more consumption will be seen this summer.
Okay, Mr. Nandi, good morning. Niraj here. So, if what Nilesh is saying, and credit to him that he's saying with candor that we should have planned it better, is it possible, therefore, Mr. Nandi, to predict a trend of sorts of how strong can this trend be? Because it would have caught most people by surprise, the surge in demand as it came.
So I think it is difficult to really predict very accurately, but we can get a sense given the type of reports that we have been reading from SkyMed, from IMD about how the weather is going to be this year and the El Nino effect coming in. So I think we were prepared very much that we will see a harsh summer this year. And so last year also, I think the expectation was there. But if you look at last year versus this year, last year we did see early Holi and therefore early summer and then intermittent rain somewhere in the month of April and May. But while this year we saw a delayed winter, right? Going up to end of March in northern parts. And therefore, it was expected that the summer will be more harsh. And with El Nino effect, we were expecting heat waves across the country. And therefore, as a brand, I think we were prepared to upstock the market. We were prepared to increase our capacity and stock up to meet the summer demand.
Mm-hmm. Okay. Nilesh, good morning to you. And by the way, we should have had you in the studios, Nilesh. So the next time, let's try and do that. But here's my question, Nilesh. Mr. Nandi's point is well taken, right? That difficult to maybe call out a trend, but based on the demand patterns that you would have seen across your branches, do you reckon that this will stay strong till the monsoons make a pullback? I mean, yesterday SkyMed was saying that we might well see a normal monsoon. Let's hope it is that. But do you expect that until then, the demand trends look to be solid?
So, Niraj, the demand trends looks very solid unless and until, like last year, if you have intermittent rains coming in and spoiling the show. If the temperature stays the way it is doing, then I think nothing can stop the demand. And as Mr. Nandi rightly said, the pricing is not a problem. The affordability is not a problem because our 80% of the business, irrespective of the category, whether it's mobiles or laptops or air conditioners or air coolers, is happening on finance. So once you have on EMI, then I think affordability is not the reason. And also, we also have to understand why the demand goes up in the metros and other developed cities. For the simple reason is, here already the penetration of air conditioner is reasonably good. And all the air conditioners which are more than 6 to 10 years old need to be replaced because the compressors over a period of time start going down, the efficiency of the compressors going down. And secondly, a lot of consumers have realized that if I'm carrying a 6-7-year-old AC and even if it is cooling okay, although it may not do so well during the peak summers, but if they replace it with the new inverter ACs, it will pay off in the next 3 to 4 years by the reduction in electricity bill. So that is also one thing which a smart consumer is realizing and is pushing up the sales irrespective of the weather.
Nilesh, in terms of upgradation, are you also seeing that move to premiumization? When people are going in for a newer model, they're going in for a higher one, or more of a propensity to go in for the higher end of the range?
Yes, Tamanna, and that is something which we have seen post-COVID across the categories in our stores. So even in air conditioners, when people are changing, they want better air conditioners in terms of 3-star or 5 stars. A lot of people are going for 5-star inverter ACs, and they want something which is connected air conditioners so that they can connect it to an app and basically a smart air conditioner. So upgradation is definitely on the cards, and people are upgrading across the categories.
Okay, and Mr. Nandi, is that a trend that you're also seeing? Because as newer and newer product lines are now hitting the market, is the focus again on premiumization like we're seeing in so many other product categories?
Yeah, very much, Tamanna. I think the trend is very evident, and we are seeing this trend for the last, I think now the 3rd or 4th year, that premiumization is driving the growth in the category, and it is across categories. And when we say premiumization, AC, of course, is a premium product. We all know, because given the price point. But in AC also, what we see is the 5-star growing faster, is the high ends, that is all the smart ACs growing faster. Any specific feature that comes with, like we have launched recently the nature-inspired wood finish, and I think we are seeing huge demand for those. So anything that is premium in its looks, in its technology, in its features are the first one to be adopted by the consumers. We are seeing that. Same is the case with even refrigerators. The high end, the one with converti, the high end one with glass, the more aesthetically better design products, higher capacities, these are the ones that are moving out the shelf faster.
I'm wondering if this is coming at the cost of coolers. Nilesh, you want to take that first? Is this coming at the cost of coolers, or are cooler sales also, on the same trot?
No, it's not coming at the cost of cooler at all. In fact, both consumers are different. In fact, there are a lot of consumers who buy air conditioners. They also buy coolers because they need cooler for possibly a smaller study room or a puja room. And then coolers is something which people buy where they don't, in cities and in places where they don't need it throughout the year. Whereas air conditioner is something which is used throughout the year. So when the peak summer hits in, that's the time when cooler goes. So cooler is also going as strong as air conditioner this year. And cooler for sure, I'll tell you, will go out of stock.
Okay, fair call. Now the other thing is, what does this do in overall business? Mr. Nandi, I'd like to come to you on this one. We know that commodity costs are on a bit of an uptick. So while sales are great and pricing is great, would companies like yours take advantage of that to enhance the pricing in a way to cover up for the increased input costs? I'm presuming input costs have gone up.
So Niraj, I think if you look at the trend of our industry, most of the raw material purchase for the quarter of summer is done in the Jan-March quarter. So commodities for April, June has already been purchased by most of the brands. And given, I think, after few years, we are seeing a very strong demand in the cooling categories. I think we will try to take this call of increasing price given the commodity hardening little down the line. Maybe post summer is what I expect, both for the industry and as well as for us.
So then here's my question then. You have strong demand right now, but lower priced inventory doesn't prompt you to price higher. Post monsoons, when the newer priced inventory comes into play, and because of the global PMI data looking so strong, presuming that the input costs stay higher, will you have the ability to hike prices? Sorry if you answered that, but I wanted a pointed answer to this.
So I think if the trend continues as we are seeing, generally also what we have seen is that post April or post May, the commodity starts softening. That's the trend. It goes up sometimes in the month of Feb, March, and goes up to April, May, and then it starts softening. But if it starts softening post May, then I think we may not see a steep price hike. But if it continues, then we might see a steep price hike post June, which is in the month of July, in the second quarter of this financial year.
This question for Nilesh, of course, and we've been looking at the kind of impact, at least on the listed entities who are in the cooler space and in the air conditioning space. From your vantage point, Nilesh, which are the brands that are doing the best?
So I think this time, since the season has picked up, I think there is all the brands which are already doing good, and they'll continue doing good, because see, what is going to happen is somebody who's doing better will go out of stock of particular models earlier. So there'll be room for all. But to list the few, Voltas is doing very well, Daikin is doing exceedingly well, so is Blue Star, Hitachi. I think it's very difficult to pinpoint because the market is growing. And in a growth market, I think there's space for all players to play well. And now I'll tell you in summers what happens. You have a peak summer, so there will always be installation issues. So today what happens is the brand which does the best, if for 2 days it gets peaked out as far as installation is concerned, automatically the next brand is sold, because consumers are not wanting to wait. During summer, they are willing to compromise on the choice of the brands for the speed of installation. So in short, I think all air conditioner brands will do well.
So there's not really too much of brand loyalty. It's more about what's available at the right price and quickly enough, is it?
Brand loyalty is there, but when the summer hits you and takes away your sleep at night, you forget all loyalties.
Diplomatic answer as ever from Nilesh.
Yeah, most certainly. No, so Mr. Nandi, just one thing. What kind of sales are you expecting? For example, in quarter one of FY25, what's the kind of growth that you anticipate for cooling solutions?
So for Godrej, I think we are clearly expecting a 50% plus growth in air conditioners and about 25 to 30% growth in refrigerators. That is the expectation for our brand.
Wow, 50% growth. And that's not of a low base. You believe of a normalized base, you probably grow 50%.
Yeah, so last year in air conditioner, we could grow 2x. given that the type of launches that we have had, specifically the new technology that we have launched, which is NT-League. This year, again, I think we have given something very new and unique to the market, which is the nature-inspired wood finish. And that has got very good response from the market. And that gives us confidence that we will be able to sustain the growth at least 50% plus.
Got it. Okay. Final question. And Nilesh, this is to you. Just off air conditioner, air coolers, but there was a flash just a moment ago about how Apple is making 1 out of 7 iPhones now in India, wanting to reduce the reliance on China, so on and so forth. We know that Apple is a large market, India is a large market for Apple globally. Non-AC, non-air coolers, how have the sales been thus far in the year?
So overall, mobile as a category has been doing quite strong. Laptops is going reasonably good. Televisions is a little on the flat side, single-digit growth. Washing machine is a cause of concern because it's not growing. Small appliances and kitchen products are doing reasonably good. So, but overall, if you see in a nutshell, I think the industry is doing well. We'll see a growth of at least 8 to 10% this year. But this year, looking at the summer season and the way ACs and coolers have picked up, I think this year could be a better year than the last year. And we can see overall a growth of 15% also. And most importantly, what we are seeing is premiumization happening. So the ASPs across the categories are growing. So volume may be a little issue in categories like washing machines, but value is no longer an issue.
Obviously, if you can buy now, pay later, it all becomes easier. That financing model has changed the game. Thank you so much, Nilesh Gupta and Kamal Nandi. We hope to see those smiles on through this scorching summer where you're saying you're going to hit record kind of sales numbers. I think another reason definitely to smile is that story that we're seeing on our screens. I mean, I find it astonishing. We knew it was coming, Niraj, but in no uncertain terms, and that's the Bloomberg story that we're talking about. Apple is looking to cut its reliance from China, double its output in India.
Double, yeah.
Yeah, and 1 in every 7 iPhones will be made in India. I think that's completely an astonishing turn of events. It was going to happen after COVID, but remember there were many contenders for that piece of the pie and for the Chinese business.
Yeah, maybe the global. So I think yesterday I was talking to the BofA strategist, India strategist, yesterday or day before, was telling me that Apple's India is probably the second best market for Apple globally, or third best, if you will. Maybe a great domestic market prompts them to do this, but it's music to the ears, right, Tamanna? We're seeing Apple doing this. Google is building its largest headquarters out of the US in Hyderabad in India, and we've seen multiple other companies do that. It's a year wherein we're seeing MNC announcement. Yes, Tesla is wondering this too. Yeah. So it's quite stunning, really.
Yeah,
yes.
No, the Apple story even more so because the China piece was not just for their domestic market. Yeah. Yes, our numbers are growing, and of course, relatively, Apple has a smaller base, but fastest growing pace in India, but even as an export piece. So that has a lot of opportunity for some of our players over here.
Most certainly. It's something, it's music to the ears. It's great to see this kind of stuff happening. We know entrepreneurship is on the rise in multiple ways, but global manufacturing in India is something that is really stunning.
All right. On that note, very short break. When we come back, we're focusing back on some of the stocks that are buzzing this morning. Vedanta, PB, FinTech are having a fabulous morning. We'll tell you why on the other side.
Back with India market open right here on NDTV Profit, and when the markets open, that one stock that really told people that come on and buy me is Vedanta. People did that because the stock has done really well, and on account of a CLSA upgrade to a buy. Kanika, my colleague Johnson, with more details of what the note suggests. Kanika, a very strong reaction to this note.
Right. So CLSA has come up with a note on Vedanta where it is upgrading the stock from underperform to buy rating, and it has raised the target price from rupees 260 to rupees 390 here. And CLSA also notes that the company is well placed to benefit from the commodity upcycle and from the diversified commodity exposure. Now here, growth and margin expansion capex are to be supposed to drive the earnings. Earlier, Vedanta had guided for its group level EBITDA to rise from $5 billion to $6 billion in FY25 and $7.5 billion in FY26. This was to be done through capacity expansion, backward integration, etc., where aluminum expansion was to be supposed to be the key driver. Here, based on this, CLSA has raised the EBITDA to 4 to 13% over calendar year 2024 and 26, and it has also showed re-rating potential for the company. However, there are a few key levels to watch, which are leverage trajectory and corporate structure, because while debt at parent Vedanta Resources might have declined meaningfully, the leverage at Vedanta has increased.
Yes, indeed. But today the market is shrugging off the fears of that. Kanika, thanks so much for putting that into perspective, of course. But, it's interesting what's happening. Of course, CLSA note on Vedanta leading to Vedanta doing well. But we spoke about how Jeffrey's note rightly pointed out the fact that PMI numbers across the world have looked so solid. As a result of which, you're seeing some of the other metal names do well too, Tamanna. It's not just the Vedanta story today.
Completely shining today. Vedanta, of course, doing fabulously. And I don't know, last time when I saw Vedanta up about 7%, but NMDC, Hindustan Zinc, second day in a row, NMDC about 5% up. SAIL, Nalco, Tata Steel is moving very, very smartly. So the story this morning is actually all about the metals. Some of the oil and gas names also not doing badly at all. If you pull up HPCL, BPCL, and as a result, of course, your entire PSU pack is having a pretty good day, but your Aegis Logistics, Petronet, LNG, MGL as well, Mahanagar Gas after a while perking up once again. And that's really what's moving. Not too much on the other counters. Banks are doing okay. Nothing too great over there. But overall, you have all your PSUs, oil and gas and metal stocks, which are really moving today. I think the data coming out of China is also important. We spoke a little while ago about what iPhone is doing or what Apple is doing in China. But Fitch has also changed China's rating as an economy to negative. And the China story and what its play out is going to be on a variety of, that's going to have an impact on countries, companies, stocks on a very large scale. So that's one theme to watch out for.
And just before we wrap up, newsmakers today, Ramco, Kolte Patil, the brokerage note up 8%. Vedanta, of course, is up 6.5% today. Shivalik, Rasayan, the USFDA observations not adjusts procedural in nature, and PB Fintech up 5%. So a clutch of these names have done very well for themselves on the back of news. But market breadth, okay, almost even Stevens. So not a bad way to end this leg of India market open. Thanks so much from Tamanna and me and the team that put this show together. Up next, though, it's an unmissable interview, Worldview, with Savita Subramanian of BofA Securities. Thanks for tuning into Worldview. I'm your host, Niraj Shah. Our guest today is Savita Subramanian, Head of US Equity Strategy, BofA Securities. Savita, such a pleasure talking to you right here in Mumbai.
Great to be here. Very exciting.
How's the India trip been thus far?
It's been very interesting. I've been traveling all over the place, meeting with institutional investors, taking field trips to malls and checking out the scene in Mumbai, and it feels like activity is quite energetic here. There's lots of infrastructure, and it feels like the city is buzzing.
Okay, I'm going to come to that. I think some parts of the country are doing the same as well. But let me start off with your overall worldview, Savita. There is over the last 9 months, at every single point of time, every single day, you can count at least 10 strategists who are calling out the winds of caution and why people should be careful. And markets seem to have climbed the wall of worry. US markets, India, some of the others as well.
Yeah.
You guys were among the first ones to call it out. It was a brave call back midway through 2023. What's your stance now and why?
Well, I'm still positive, maybe a little bit less bullish than mid last year. And that's simply because sentiment has improved a little bit from these really dire bearish levels that we were at. Last year, I think, after the collapse of SVB, there was just a complete capitulation in terms of, equity forecasts. And I think there was this view that we were heading into a 2008 style financial crisis. And when we looked at the equity market, when we looked at consumers, we didn't necessarily see the same balance sheet risk. But what actually made us feel really kind of confident in our outlook, in our positive outlook, was the fact that it was a very gut-wrenching call to make, because so many intelligent people disagreed with us. There was a lot of swirling anxiety around this credit cycle potentially unfolding. So I think whenever you're making a call that feels very uncomfortable, it's usually right, because you're going against the trend, you're going against this sort of, what's probably priced into the market. And today, I would say it's more comfortable to be positive. There are more people that agree with us, so that makes me a little less bullish, if that makes sense. Because ultimately, I think that sentiment is the best indicator in the near term, and sentiment right now is kind of neutral, not bearish.
So early March, you upped your targets on the S&P. I'm talking about the US markets currently only. And I hear you say right now that because so many people are in consensus, that makes you uncomfortable. You reckon that or those levels could be near-term tops unless something else develops materially?
I think where we are today is an interesting environment, because there is increasing bullishness on certain themes in the U.S. market, like AI, like drug discovery, and other aspects. But the bullishness hasn't necessarily broadened out to the overall market. So if you look at the average mutual fund manager, his or her exposure to cyclical versus defensive sectors is at almost the same levels that we saw in 2008, 2009. No bid on economically sensitive areas within the U.S. market. And I think that is where we see the strongest potential for gains. But we do see a lot of crowding of investors, individual investors, pension funds, mutual funds, hedge funds. Everybody is kind of glommed onto this AI theme. But I think there's more to go beyond just buying the CapEx takers in the AI world.
Okay. So if the US markets hitherto has been the story of the big seven, and you could argue even within those seven, maybe four, if you will, do you think...
even narrower.
It's even narrower. Do you think it broadens out, though, even if the headline numbers stay kind of flatline?
I do. I think that we're actually seeing it now. And in fact, in March, I think March was an interesting transition month, because in March, I think 60% of the companies or thereabouts outperformed the S&P 500. Whereas prior to March, it was well below 50%. So we're now in an environment where if I'm a stock picker and I just throw a dart at a dartboard, I have a higher chance of picking an outperformer than an underperformer. I mean, obviously, there's a lot more to investing than throwing a dart, but I think that just the odds of, picking stocks that can outperform are increasingly better. So, our view is that you can move from just this these 4 mega cap companies that have been crushing earnings to a broader array of equities, some of which have been ailing recently but are starting to come out from their profits recession.
Interesting. So, Savita, here's my question. It's a year of, the big US election. It's a year of dichotomous views on what the Fed would do. And you're talking about maybe broadening of the rally, if not the earnings. Would you believe that markets could flatline or maybe even stay at these levels, even if we do not see rate cuts for the rest of the year?
Yeah, this is the question, the trillion-dollar question today is, will we see these 3 rate cuts that the Fed is that investors are expecting the Fed to do? I think there is a real risk that we don't see 3 rate cuts. And, our economists are forecasting 3 cuts, the first coming in June, but they acknowledge that there is a, downside to this forecast. In that environment, I still think the equity market can do okay. And in particular, the S&P 500 can do quite well because a lot of these companies, think about even this Magnificent 7 or Magnificent 4, these are mega cap companies with net cash sitting on their balance sheets. So they're actually making money as short rates have moved higher. And, similar story for consumers. U.S. consumers, the lion's share of household net worth sits on retiree balance sheets. Retirees are mostly homeowners who have termed out their mortgages and are now paying a very low mortgage rate of 3% or thereabouts. And they're reaping a 5% return on their short duration asset base. So this idea that the Fed is going to raise interest rates and slow down the consumer has actually not worked as well as the Fed would have expected. And I think it's because, both corporates and consumers anticipated or essentially took advantage of this super low interest rate environment, locked in fixed rate, low obligation debt, and are now enjoying the higher asset yield on their cash and short duration bonds. So it's a really unusual environment where actually hiking interest rates at the short end hasn't necessarily done all of the things that the Fed would have expected. I think the real risk to the economy and to the U.S. consumer actually meaningfully slowing down is broad spread job losses. And we haven't yet seen that. So we've seen some job losses, layoffs in Silicon Valley and Wall Street, but not necessarily across middle America. And in fact, it's really hard to source labor in manufacturing across the middle of the U.S. There's a lot of reshoring that's taking place, and it's driving manufacturing. And what we're hearing from small business owners across the U.S. is that it's really hard to find labor, and you have to pay up for labor in these areas. So I think the idea that U.S. consumers are going to stop spending because rates have moved from 0 to 5% is not necessarily the math we should be paying attention to. Instead, we should be looking for real wages. Are real wages positive or negative? If they're positive, I think consumers can continue to spend. The U.S. consumer has an insatiable appetite, and they will generally surprise in terms of spending more than we all forecast.
Yeah, I think the rest of the world, save for China, is hoping that now the rest of the world gets a slice of that U.S. consumer, right? You think that could happen? Just a broad macro view of sorts that there is this whole China plus one in cases Europe plus one theory playing out from manufacturing. Could it happen from a consumption or direct B2C businesses, if you will, as well, that China stops being the most favored or the most sought for supplier for the US consumer, and other economies pick up the mantle?
I think that there is a theme taking place. I mean, even India, I think when you look at consumption trends, it's really exciting to see sizable changes that would probably be surprising to your average U.S. investors. So, for example, iPhone sales were very high here. I think we hit records in terms of regional sales of Apple. And that's not something that you would have expected to see in the India consumer, where I think there is this view that the India consumer is more value-oriented, but higher price point goods are flying off the shelves here. And, I think that speaks to potentially an income divide that's increasing in many regions of the world. Like in the U.S., there is this, massive divide between the haves and the have-nots, which is starting to close. So actually in the U.S., counter to what's happening here in India, the layoffs are happening in higher income, white-collar jobs. So we're seeing a trade down of consumers where, Walmart has cited that their sales are growing the fastest in consumers that are making over 100,000. So these customers are trading down into lower price point retailers, and I think that's one of the interesting areas that could maybe put some pressure on luxury goods. But then when you look at what's happening here, it's a very different story. There's actually a growing demand for luxury. So I think that it's important to keep this global view, and I'm happy that I was able to see it firsthand.
In some sense, India has never had this cycle of luxury doing really well. It's the first time in so many years that we're seeing premiumization take so much center stage, if you will.
This is a new theme. I think this is a very new theme, and it's surprising. Yeah, I think that it's something that we should pay attention to. And I know, 10 years ago, we were always trying to find companies with the potential to grow their China exports, their China consumer exports. Today, maybe the new growth theme is looking for companies that can grow their India exports, because this is a huge population base, and there's a potential for increasing demand here.
So sorry, just before we take that break, you were saying that there might be a chance for companies globally, or stock pickers globally, or strategists globally, to look at companies which might enhance their share of exports to India.
Exactly, yeah. So I think that there's this idea that, today the percentage of sales exposure that the S&P 500 has to India is de minimis. But, 20 years ago, China's sales exposure was de minimis, and that grew to be at least 10% of a lot of these consumer companies and multinationals. So I think the idea that we're going to see that grow is, one of the themes that we're paying attention to. As strategists, we're always looking for growth themes, and I think this is sort of an interesting one to track. Obviously, there are, risks and trade-offs, but I think that it's a new theme that is worth keeping on one's radar.
Interesting. Savita, stay on. Lots more to talk about. We need to slip into a quick commercial break. Viewers, we are talking to Savita Subramanian on Worldview. Be right back after this short break. Back with Worldview in conversation with Savita Subramanian of BofA Securities. Savita, you've spoken about the possibility of a broadening US markets, maybe not even 3 rate cuts. There is also this political calendar-filled year, India, US, etc.
Everywhere.
Everywhere. And 2 geopolitical wars continuing as we speak.
Yes.
Is there a case for equity markets to do an encore or a near encore of what we saw in 2023, or is that a far cry?
You mean a strong rally?
Yes.
Or yeah. I think there's definitely a possibility for that. I mean, when you think about it, the markets have absorbed a lot of bad news. A lot of bad news is behind us. We're currently in this sort of fairly high conflict environment. Geopolitical risk has increased, and we're in the middle of 2 wars. 2 years ago, nobody was expecting a war. So 2 years ago, there was no kind of risk priced into markets around geopolitics. Furthermore, we're at a point where the Fed has already moved the U.S. economy off of that 0 interest rate base, which was a very unnerving environment because, when you looked at a lot of these companies, they were generating earnings by borrowing money at, super low interest rates to buy back their shares. That's pretty low quality earnings per share growth. And the idea was that's not a sustainable source of growth. So what next? I think now where we are is an environment where, again, the market has absorbed a lot of bad news. Companies have been spending on efficiency gains. So over the last 2 years, we've seen companies in the industrial automation sectors reap CapEx and, kind of mint money from labor-intensive companies that are trying to automate their more expensive workforce. And what we're seeing today is finally a little bit of a pickup in productivity, which is a theme that we haven't seen in the U.S. for a very long time. In fact, since 2001 was the point at which China joined the WTO. And since then, a lot more of the margin expansion and growth in S&P companies has been driven by globalization. If things are too expensive in the U.S., you don't need to get efficient. You can move them to cheaper parts of the world. Now we're in a more protectionist environment, and I think what's good about that, it's not necessarily great in terms of inflation. It's probably inflationary, but what's good about that setup is that companies are forced to create tangible, visible, efficiency-driven growth, which is easier to predict than just moving stuff outside of the U.S.
Okay, so in that light, what do you hear about emerging markets like India? It's still, we still classified as one, even though the 3rd largest, the 4th largest market cap.
I know, exactly.
Yeah, so what do you hear about this? Because the problem is I hear a lot of people talk about how India is expensive, but then India has always been so. So what is your view, if you have one, or the BofA view? And what is the client's view?
Yeah. No, I think that that there is a kind of a tendency to want to look for better growth stories than the U.S. Because the U.S. is a developed market. Sure, it's got a lot of growth when it comes to themes like AI, et cetera. Yeah. But our consumer has already expanded. There's not a huge growth story left for the U.S. consumer. We're already consuming probably as much as we possibly can. But I think that that's the idea for other emerging economies. China it's harder to invest in today, given a lot of the geopolitical risks, the tech wars. So I think that India fills this void of positive demographic trends, an emerging middle class consumer, a more affluent, an appetite for more affluent, higher price point retail. So I think that that's a growth theme that's very important. And then when I talk to our India equity strategist Amish Shah, his view is that this infrastructure that we're seeing in India has a very long tail in terms of growth. It's a 10-year growth cycle, not just a 1 or 2 year growth cycle. So there are a lot of aspects in the India economy that could turn this region into the next kind of great emerging consumer. The U.S. focus on India could really be enhanced relative to prior cycles where the U.S. was more focused on Latin America or China. I think this is a new angle that hasn't necessarily been fully vetted or tracked. So this is definitely on our radars as we move forward.
I loved one of the notes that you written wherein that it spoke about two secular bull cases: efficiency and India, and of course one of the things was the new aspirational consumer that you spoke about. So yes. It's effectively that.
Yes, exactly. And efficiency is a new theme because, like I said, U.S. companies had gotten lazy about, really trying to think about how to do more with less people, and labor efficiency gains really stalled out over the last 20 years. If those are starting to become, front and center for corporate management, I think that's actually a very bullish theme in terms of becoming more labor light. I suppose the risk is if all these, U.S. workers are losing their jobs, does that hit consumption? But I think, when you look at prior cycles of efficiency gains, like in the 80s and 90s, we saw this PC cycle where, personal computers and automation was one of the sources of real strong efficiency gains. And during that period of time, you actually saw consumption increase. New jobs were created where other jobs were, obliterated. So I think that's the idea is in any tech revolution, even AI, I think we'll see new jobs created as other jobs go away.
Okay. I have two more questions.
Yes.
One, I don't know if you have an answer for this, but if 2016 showed us that it's not necessary that a November event could be disruptive for markets. It's a much spoken about U.S. elections. India elections seem to be a foregone conclusion. Can an electoral outcome upend the U.S. markets and thereby the world markets, because U.S. still continues to be the mother market?
It's interesting. When you look at presidential election years, typically what you see is that volatility starts to increase, as we move into campaign season. So from July to November of an election year, a presidential election year, the VIX has increased. The VIX, which is a measure of volatility of U.S. equities, has increased by about 25%, which is usually negative for markets. But then come election day, regardless of the outcome, there is usually a year-end rally just based on the removal of that uncertainty overhang. So I think that this could be a year like any other. And what makes me feel good about the election, it's hard to know what issues are going to be front and center. I mean, we're just moving into campaign season. But I think that where we are now is an environment where both sides of the aisle agree on two very important issues. One is keep tech and IP in the U.S., and, this is sort of the tech and security war. And the second is move manufacturing back to the U.S. So one of the reasons that the labor market is so tight is that a lot of these multinational companies have realized the risks around global supply chains and have actually started, meaningfully reshoring their companies back in the U.S. or in Mexico or Canada. In fact, half of the import activity that used to take place with China has moved to Mexico and Canada. So there's this very busy North America corridor, which is actually quite positive for the economy.
Okay. And I have one final question, and which is on what could happen to multiples over the course of the rest of the decade, and could that have a big impact on markets? Because we'll be higher for longer for sure, right? So we no longer very likely going to be in the zero rate scenario of the past decade. Does it meaningfully impact what investors should expect out of equities by and large?
PE multiple? Yeah, I mean, it's a great question. And historically, there has been a trade-off between, the higher inflation is, the lower the multiple, and vice versa. Today, though, I think that comparing the market multiple to prior iterations doesn't make that much sense. I mean, I don't know if it ever made sense because the S&P 500 itself has changed so dramatically from the 1980s. In 1980, 70% of the S&P 500 was manufacturing, asset-intensive, CapEx spenders. Today, 50% of the S&P 500 is tech and healthcare. These are R&D, innovation-driven stories. So I think that just that sort of comparing today to 20 years ago is an apples to oranges comparison. I do think that, if you look at even some of these expensive tech companies, they've gotten cheaper. So earnings have actually materialized for the Magnificent Seven in many cases. In other cases, not so much. But I think that the idea that, growth stocks can grow into these multiples, I thought it was very interesting to see that Meta initiated a dividend at the beginning of this year. So it's basically a sign that this is a company that has been considered a go-go growth stock. Yeah. They initiated a dividend, and you would think that the company would suffer that ex-growth penalty, but the stock actually rallied. So I think we're in a different environment where, large cap companies can be growth and value, or growth and income opportunities at the same time. And earnings are actually materializing for many of the more expensive areas.
So good talking to you. Thank you so much for taking the time out and being in our studio, Savita. It was a real pleasure.
Oh, it was a real pleasure for me too. Thanks for having me.
The pleasure was entirely ours, and viewers, thanks for tuning into this edition of The Worldview.
Nifty claws back the mark of 22,700. Sensex hovers around 74,500, seeing flat close on Tuesday. Most sectors trade in the green, and of course metals along with oil and gas lead the markets at the moment. Meanwhile, Vedanta surges over 6% in trade as CLSA upgrades the stock with a 50% target high. And Apple doubles its India iPhone output to $14 billion in FY24 as the company looks to cut long-standing reliance on China amid mounting geopolitical tensions. Hello and welcome. This is the FNO Show. I'm Agam Vakil, and in this show we take you through all the stocks which are buzzing in trade, but largely the futures and options space in Indian equity markets and what's been happening there. Of course, it's an important day to keep an eye on because we're going into a truncated week considering tomorrow's a holiday, and we have the Nifty as well as the Bank Nifty expiry today, and we'll have a whole lot of cues out there to keep an eye on as we move into trade today. But at the moment, what we're seeing is a flattish sort of a day as far as the Nifty is concerned. Over the last 1 hour trade, we haven't really seen too much traction there. It is maintaining the 22,700 mark, and of course we are near lifetime highs once again. The Bank Nifty is another interesting one, and that's where once again we are seeing positive traction coming through, an up move around 0.3%, holding on to 48,800 thereabouts. In fact, it's tried to test 48,900 as well, and let's see if it in fact moves on and further up ahead. But to take a look at the broader markets quickly before I shift focus and talk about futures and options, the broader markets are in fact doing well right now. We have a 0.8% up move for the mid cap index. The small cap index is also up around 0.6%, and your overall advanced decline ratio for a majority of these indices is in fact improving as well. As you can see there, it looks fairly evenly poised between advances and declines, but advances edge declines by a tad bit through at least so far, and that's how it's been. And in fact, that gulf between them has also widened to a certain extent over the last 15-20 odd minutes. But let's talk about how things are shaping up as far as the futures go. Now, if you consider the Nifty snapshot, the open interest hasn't changed at all. Even though we did see a little bit of an increase yesterday, well, for now it is looking like a very quiet day when it comes to the change in OI as far as Nifty futures go. And the Bank Nifty futures, again, while the underlying advances, we've also starting to see about a 2.7% increase in the Bank Nifty open interest in terms of its futures. Now let's talk about the options market. This was going to be a pretty tricky day, I reckon, because it's going to be Nifty as well as the Bank Nifty expiry. But at the moment, we do see a lot of traction around the 22,000 and 22,800, 22,900 marks, and those strikes and thereabout. Well, moving on, if you consider your overall open interest distribution, 23,000 call is the one which continues to have the max OI, and on the downside, we have 22,500 once again with the max OI there. But 22,400 and 22,500, the open interest is just as substantial. So keep an eye on that one. Moving on to the Bank Nifty, and that's where the open interest distribution perhaps would have changed just a tad bit. Now, we are very close to the 49,000 mark, and still we do have a substantial amount of calls being written there, and I reckon that it will act as a little bit of a resistance on as the Bank Nifty once again tries and tests that mark. So keep an eye on that one, and of course on the lower end also watching out for 48,500. There is a significant amount of accumulation of puts around 48,700 as well. So those are the two levels that you can keep an eye on the downside at the moment as far as the Bank Nifty is concerned on an intraday basis, of course. But that said, let's get in our experts for today and see what they have to make of these markets. We have Bhavin Mehta of Daulat Capital and Ajit Mishra of Religare Broking, who's joining us on the show right now. Good morning to both of you. Bhavin, your view on the Nifty. Let's start with the Nifty at the moment. What are you doing on an intraday basis? How are you placed positionally?
Yeah, hi. So last couple of trading sessions, what we have observed, particularly for benchmark indices, is the second half of the trade we usually observe a kind of distribution. While broader market indices continues to trade with the strength, the benchmark indices are not able to sustain the initial gain that we observed in the morning trade. So my sense is with volatility index already moving closer to 11 mark, my sense is that benchmark indices ideally should trade on a sideways. I am not seeing any major move beyond 22,800 for the timing. We'll wait for a close above this level of 22,800 for another leg of an up move. So we were already positive earlier, and we have been highlighting this since 22,350 break that we are likely to move closer to 22,800. Now need to see a close above 22,800. Now, as far as today's expiry is concerned, my sense is that we are going to be in a very tight range for Nifty at least. Upside will be kept around 22,750 to 800 range, where good amount of call writing is being observed. While on the downside also, I am not seeing much below 22,650, 22,680 kind of a mark. So my sense is, more or less, it will be a kind of a range trade for Nifty person.
Absolutely, and it has already been a range trade. I don't reckon we've seen more than a 50, 60, 70 odd point on an intraday basis from a high and low in terms of the cash markets for now today on the Nifty. But Ajit, welcome to the show. And well, I guess the same question for you. How would you play the Nifty on an intraday basis, as well as what your positional stance would be on this one?
So good morning, Agam. So Agam, we are seeing that the index has been maintaining a positive tone. We are inching gradually higher, but the momentum is missing. Despite the alignment of the banking index, which has also made a new record high. So this indicates a bit of a caution due to mixed global clues and the beginning of the earnings season. And I feel that this tone might continue in today's session as well. So for the intraday, of course, one should wait for any dip. Let's say a dip towards 22,670, 680 zone, around 30, 40 points down to the current level. One can look for buying opportunity with 620 as a stop and 750 as a target. So broadly, this 600 to 750 is the range that we are eyeing for the day. Banking looks comparatively better, but as you have rightly mentioned, that 49,000 is still a critical hurdle. So once we cross that mark, we feel that banking can outperform in today's session. So one should wait for breakout above 49,000 mark to make any fresh trade in the banking. But for Nifty, it's a buy on day.
Well, of course, once you see the bank Nifty move above the mark of 49,000, you start seeing a lot of unwinding of the calls written around that mark, and that could also provide an additional impetus for the move upwards. And considering it's an expiry today, the move very well could be very, very accelerated as well. But Bhavin, your view on the bank Nifty as well, again, on an intraday basis as well as positional.
Yeah, so before going to Bank Nifty, two of the stocks from Bank Nifty are witnessing very good amount of strength in trade today. Basically, Kotak Mahindra Bank and Axis Bank. Yesterday, post the block, we are looking at good amount of strength for Axis Bank. And Kotak Mahindra Bank, we have earlier seen good amount of short side development. Today, my sense is that if this level of 1800 is being held, also on the daily chart, we are looking at a positive crossover. This could lead to a probable uptick for Bank Nifty. That is what the sense I'm getting from the constituent readings. As far as Bank Nifty option data is considered, we are looking at good amount of put writing, OI addition at 48,800 strike put. My sense is that this level ideally should not be broken. If we break past 49,000, which you have been mentioning, definitely there will be a strong move. However, on a daily chart, we are already looking at a price objective of close to about 49,500 to 50,000 on upside. So my sense is eventually it should be there. Whether this expiry or the next, that remains a question. So need to break 49,000 definitely with unwind at that particular strike. That will add to added momentum on upside.
Okay, let's talk about stocks then. Ajit, stocks on your radar this morning?
So again, considering the market tone, like we have already seen a very strong surge in the auto basket in the ancillary space as well. So now we are seeing stocks from the tire space also catching up with the move. And Apollo Tyres, after this retracement, has formed a base, and today we are seeing a recovery or a breakout from the same. So 498 is what we are eyeing in Apollo Tyres. So one can go long with 472 being the stop. Another space that one should keep a close eye on is OMCs. So OMC is also a similar kind of a structure. Week of a corrective move followed by consolidation in a narrow range for 4-5 trading sessions. And today we are seeing a recovery or the range breakout. So Hind Petro is something that we like from the OMC basket. 495 is what we are eyeing in the immediate future. So with stop at 465, one can go long in HPCL also.
Okay, let's pull up a list of all the stocks which are in the futures and options space, which are potentially seeing an increase in OI. We can potentially try and get some sort of an idea about what's really buzzing, at least as far as the futures goes. And we do have shorts in Divi's Laboratories. Now, this is where we have a 2% decline, and your futures is looking at a 10% increase in OI. Petronet LNG, on the other hand, another very interesting one. That's looking at an up move around 6% at the moment, with longs building through. Then, of course, you have Bharat Electronics. This one, the underlying is up around 1.2%. Addition, a decent amount of addition as well. And on the other hand, we also have Lupin. Lupin, again, the advance on the underlying is not as much as that. We have less than a 1% up move, but another 5.5% added there. Let's take a look at all the stocks which are seeing unwinding today. Now, we have Exide, and Exide has been very excited, if I can say that, off late. But today we are looking at unwinding coming through, and the underlying is down by around less than 0.5%, but longs unwinding all the same. Hindustan Copper, again, this it had a very, very sharp move yesterday, and today we are looking at longs unwinding coming through, and short covering for Tata Chemicals and Canfin Homes. So we are keeping an eye on these names as well. So Ajit has already spoken about Apollo Tyres and Hindustan Petroleum. Let's find out what Bhavin has in mind from his point of view. Bhavin?
Yeah, so as Ajit has mentioned, he is positive on HPCL. Same sector, I am positive for IOC. So what the logic remains the similar. We have seen good amount of drawdown earlier. Add to that, now we are seeing a consolidation and followed by a long side development. Also, just to note, if you look at IOC in particular, we have seen a very strong long side development in 2 of last 5 series, which is November and February. And overall long development series over series continues. So my sense is that eventually this stock is placed for a move closer to 185 to 190. On the downside, stop loss should be placed around 163 levels. The second stock which I am looking at is kind of on a short side, where we have seen all 3 series good amount of short side development, which is LTI Mindtree. So if you look at this stock, since start of this particular year, we have consistently seen short side development in this counter. My sense is that one can look to sell this counter around 4900 to 4950 with the stop loss of 5050 for a possible price objective of about 4700 initially. If that level is broken, there could be good amount of negativity for this counter. Only the thing to highlight is keep a strict stop loss, given that this stock has witnessed very good amount of short side development and markets continues to remain at an all-time high. So 5050 remains a strict stop loss for this particular.
Okay, so some very interesting names coming in and from sectors which are not from the usual suspects of late. But let's maybe pick up on one or two names that we have in focus as well. And perhaps we can talk about Bharat Electronics, because this one, it showed up in our charts this morning. And even besides that, this one has been on a bit of a tear. And if I'm not mistaken, it's currently trading at a new high at the moment at around 230 rupees per share. So it seems like there's no stopping this one. Ajit, do you think that the risk-reward ratio entering into this one towards the long is unfavorable at this point in time?
So, the stock has been trading in a broadening formation on the daily chart. So if you join the last two highs, it will coincide to the current levels close to around 230 to 233 area, which we have already tested. So yes, the tone is positive, but considering that we are testing a critical hurdle, it might take a breather for a day or two. So if you are planning any intraday trade, then one should avoid. For positional trade, yes, you can continue to look for long position with 222 as a stop, and roughly around 240-42 being the target area.
Okay, and the other stock that I wanted to address was Voltas. Now, what's happened in Voltas about 2 sessions ago, we had a sharp up move. Of course, that was on fundamental reasons because we had the numbers for the financial year gone by, and it does seem like, based on the indications from various weather authorities, that it's likely to be a hot summer. And because of which we are starting to see a lot of traction in terms of volumes for ACs. But that's only from the fundamental standpoint. Technically, of course, also things have changed substantially because that move was on a gap up, and after that it sustained around those levels. And at the moment, of course, it's trading around 1320 odd. And over the past 3 sessions since, it has traded around these levels. Bhavin, how would you trade this, or would you trade this at all at the moment, Voltas?
Yeah, so we are waiting. So the initial leg of up move has been done. We have seen good amount of consolidation followed by an up move for this particular counter. 1360 was your all-time high, which was registered in October 2021. Finally, that level was taken out in an intra-month basis. However, we need a close above this particular level on a monthly chart for continuation of this uptrend. Overall, trade continues to remain on a positive side, given that stock has actually created a very strong gap on the daily charts. My sense is that as long as this holds above level of 1280 to 1290, move towards 1350 to 1400 is kind of a cap. But if that level is taken out on a monthly basis, specifically 1350, 1360 range, eventually we are going for close to about 1550 to 1600 on the upside. So trade continues to remain on a positive side. Keep a stop loss and continue to remain long.
Okay, all right. So that's the view on Voltas coming in. And on that note, we are going to slip into a short break. But before that, let me thank both our experts, Bhavin and Ajit, for joining us and taking us through their views on the markets and, of course, giving us a handful of trading ideas as well. We'll be back in just a bit. On the other side, we get you all the action on currencies and commodities. Stay tuned in. Welcome back to the show. Well, we are taking stock of all that is happening in the commodities and the currency space right now. And we start off with gold. Now, that has continued to forge ahead. And, this is one of those times where we are looking at some amount of unprecedented demand for this one. And, of course, at the moment, we are